unless you want your singing to be on live stream. You want to sing? No? You're funny. It's live now. I don't know if I'm going to be able to do this. I'm going to do my best. Well,
Look at this.
that's a fruit roll up. You can have one.
Well, it was already open, so.
Yeah. Oh, let's see here.
Why this rainbow? No, Rick. He did a rainbow. Oops. What am I doing?
It's pretty interesting. It's basically the same thing. That's assuming that this is good and not bad. It doesn't just go down forever. I suppose it doesn't matter though. Because either way. I think it's more like this. Well, hey, good morning. Morning. So today's pretty simple. The thing is going to be 652 is the current breakout, 650, whatever. So if we're not above 650, really haven't broken out. We're just kind of testing tops and stuff. I got 652 as my floor here, and that was confirmed by somebody else as well. So I feel like that's good. There's a lot of things that are going on right here with this pop and possibly rejection. We'll see. So there's a lot going on. So just to get started, and I'm probably going to have to repeat myself a little bit. We broke out of the only wedge you can really draw efficiently, which would have been started here on this LPS back in October. There was like an LPS before it broke out. That's the last point of support, if you don't know the Wyckoff term for that. So it pushed up, and this creates a last point of support, and then continues to make higher highs until the top at November 23rd. Even though we did have a big pullback, that still went higher than the previous top. So this is all one move, and then you've got a second move down to like 650. Third move actually doesn't hit until probably around here. I don't have extended hours on, so if this were extended hours, it'd be higher, but I'm just using regular trading hours, and it hits on the 14th. Remember that big kind of run up in that morning? And then it kind of hits again and comes back down. So we've had 1, 2, 3 on the bottom, 1, 2, 3, 4 on the top, 4 on the top. So that would indicate that this is a possible breakout of a wedge, but because there's enough touch points there that you could say that's a wedge. If you only had like 2 on the bottom or 2 on the top, I would probably say no, like it's not enough. That's just not strong enough, because statistically speaking, those don't tend to work out as much as the others do. So I think this is possibly a pretty decent way of measuring it. And I got a breakout target of 960, which is up here, and it makes sense. So it's like when I get a target like that, I just kind of look at it and say, does that kind of target make perfect sense for kind of reactionary move here? And the answer is yeah, it does, because this takes you back to where this buy-in was, right, on this backup that happened back around the 9s, and then it's also kind of right at the gap. So that bigger gap fill up top, it goes a bit higher than we were expecting, which would have been like 8 something. But then again, it's taken longer to get there, the idea of point and figure charts is that you're building a cause. The longer you spend going sideways, the more possible cause you have to go up. Now, does that mean that it's even going to go up right now? No, because until it breaks out and finds support over 652, there's no breakout to speak of. So even though I would say, yeah, if you drew this wedge, you could say with some confidence, like I think it's broken out, if you draw the bigger wedge, which probably goes up to here to like, let's just say like, I think it was like right here. I don't remember exactly, or maybe it was right here. It goes up to like 730 or something. This probably, if I'm gonna make a guess without even looking at extended hours, this probably is on the outer part of that extended hours wedge right now. So it just so happens that lines up with the bottom of the floor. So I think that even though it looks like it's broken out of the wedge, I think there's the extended hours wedge, which goes a little higher. And I would say that it's not out of that until it gets above 652. So for right now, like that's kind of like the key level today. And I don't think there's really anything to talk about in terms of upside just yet until you get over that level. Does that make sense? Because this could just be like a retest. You can think of it like an auto reaction, but it happened kind of slow. It's just a backward move, right, to go back and test this floor that we spent a lot of time on. So could it reject here and still head low to that 540s target? Yes. Yes, it could. And I think it would be pretty unwise to assume that this is a move that's going to go to the upside without that confirmation, because there's like misinformation, I guess you could say. Like, so I have on the 4-hour, I have the 4-hour pulled up right now on AMC, and there's divergence. It's pretty clear. Every one of these RSI bottoms has been higher. So 1, 2, 3. So that's 3 bottoms that are higher. Okay, or you could call this a steps if you don't think they're bottoms. They're more like steps. Doesn't really matter. They're places that we found support and we sat for a while, and they've all been higher, right? They haven't come down lower, but the price has come lower. Does that make sense? Like, so the RSI is finding a higher support. The price is coming down. That's a bullish divergence, okay? The same would be true on a top, like right here. This is bearish divergence. See how the RSI comes lower, but the price comes higher, and then you get this reversal, okay? So we're definitely we've been sitting on this kind of divergence for a while, and I've said it repeatedly, and I've kind of said, hey, if it takes off, we've got this divergence behind us. And what I really mean is that there seems to be this kind of inversion of supply and demand that's happening, where demand is stepping in and starting to turn up the heat, but it's just not enough yet. And once it does, you typically get a decent reaction that I want to say corrects, but it kind of corrects the divergence, if that makes sense. I mean, that's the way I like to think about it. We had a target early on of like 860s, and I think that was reasonable, again, because that was one of the floors here. I still think that's a possibility, so I don't think that's like it has to come up to 960 or something. But I just did the Bulkowski target for the falling wedge, and it's 960, which is pretty high, okay? This is confirmed, at least in part, by this other chart that I have. And you might look at this and say, I don't know what the heck's going on here. I'm going to have to kind of go through it. But this is the one that we sort of worked on last week before Christmas break. And basically what I said is that these are repeating M shapes. And so what we want to see is a reversal. And I thought it was going to come up. This is what I thought was going to happen, all right? I thought we probably would see one more of these, so it would probably come up just because I was thinking a repetition. Maybe hit around here, and then, well, probably more like around 34 on RSI, and then drop down. And I'm on a 2-hour chart. And the idea was that you would get possibly one more dip to sort of satisfy. So that would look like this, where you basically come up. You might have a little bit of a parabolic move here, but then you reject, and it's just a bear flag, right? And so this becomes like a halfway step. And you could see it would be just like a shrinking of this stair step down, and then you would reverse more likely around like 550 or something. And that's where you get the second high here, the next high here on RSI. And that's what I was imagining going into this Friday. So instead, what happened is that we walked up to the top. We did go parabolic. And it's kind of hard to see on my charts right now because they're like all zoomed out. So let me zoom in a little bit on one so you can see it. It's going to mess up the RSI stuff. We don't have to worry about that. So you can see that we've come kind of right up to that previous floor, right? And we kind of rejected off of it to start. But this is very parabolic, so I was kind of not sure we were going to make that push without some kind of major fall through. Typically with parabolas, I was drawing it kind of like this because, and I know you might say, well, that's a little too steep, but it looks right now. It came up to the top on the back side of it. The reason was because the top also was accelerating. So I was like, well, it looks to me like it's trying to like get this kind of last push up. And so I was imagining preliminary support is right here. And this is where you get a supply drop right around 637, 638. So I thought we might be coming up to like that area. And that's what I was looking at yesterday. Pretty much just had this chart up and didn't really do much with it. Just kind of let it go. So I just was like, whatever, it's just going, heading on up. And I mentioned that these three creeks were really important for us to jump over. And you can see that, just so you guys know I'm not crazy, I drew these creeks last week, and you can see the movement from creek 1 up through 3. It's just like a straight line. So I knew last week that when we were working on this, that those were going to be the most important jumps. And it's just based on, again, like knowledge of how this patterning tends to work out for us and what specifically counts as like a cat ear and like algorithmically, like where are the creek crosses. And I said I thought they were right here. And there you have a massive slide up. So there's method to this madness that I bring. It's not completely phony. And I know that it's not, but I think sometimes I'm like, I hear myself talking and I'm like, I don't know what the heck. Like, where did this come from, Like, I don't know. It's just collective knowledge at this point. But yeah, that to me makes sense that it would just kind of melt up right through there. So the most important one is the first one, and that's the breakout. And that was I say breakout again lightly. We were just talking about it. It's a wedge. It's also the downtrend, the outermost downtrend. So you could consider this like the outermost creek. The other two are they're alternate kind of possible places where you'd have resistance, and some of them come from pretty far back. So they're not like local. Like this one right here comes from way back, and so you would definitely want to see us break those and get over those at some point. Right now, we're just kind of in the middle. And I made a point that I didn't think we would get through them without a drop. So if that happens, then I was wrong about that part because I don't think we came low enough. We'll see. In terms of a reversal here, you can see like patterning-wise, this dropped backwards, this dropped forwards. If you're looking at this in reverse, this is kind of like a bounce and then a hold, and this is a hold and then a drop. And, you might say, well, that looks close enough. But again, I think that the trends are fairly clear here. Like you would come down to like the 550s probably if it had followed perfectly, let's say, the current trend down that it's on. And that's based on just these lines. You can see like where the trading has happened. Along these, we call them channel lines because I think that's what they are. I wouldn't say they're trends, they're more like channel lines. It's just the movement of the stock from a bear's perspective, that slide. So I don't know if this is low enough, right? And it definitely could be one of these things where we just kind of dipped our toes in and we'll see one more big slide down. So I wouldn't hold your breath just yet. But here's where things are getting kind of weird for me. So, and probably why some of you are watching right now is this. So there's been three things mainly that I focus on when I look at patterns, okay? And they're not always right by themselves, so it can be really frustrating. So I look at what I call like, and I'm going to put it in quotes, I look at master fractal patterns. So that's really just like sine waves. And sine waves are just made up of distributions and accumulations. So cat ears and inverted cat ears. So that's like the one thing, one of the things I look at. It's not the number one thing. I'm just putting these in a list. Number two is I look at rotational symmetry, because that appears all the time in AMC. And rotational symmetry is like turning it around a clock. And it might seem a little ludicrous, like why would you do that? That doesn't seem like a real thing, but it happens all the time. And again, it's this concept of sine waves. So again, sine waves. You have a top, and then it rotates to the bottom, and you end up with almost like a perfectly, it's like mirrored two directions. So it creates this concept of like turning around a clock. So rotational symmetry, and it's very accurate when it works. And so I did a rotational symmetry chart last week for AMC, and it would have perfectly predicted, like it predicted that you would be at a top, that you would be at $10.80 before October 24th. And it would have made you a lot of money had you done that. And I knew there was a rotation, but I didn't extend it. So I never used it, but it was definitely there. And that rotation is built out from literally the reverse split date right here. And so up until at least here, you can see these are rotating around this pivot right at $20. Up until here, this is perfect. Like this is a 50%, I mean, from top to bottom right here, it's a 50% marker right there. And then the reaction from this bottom here in September, on September 11th, to the purple line on the top, it's identical to the rotationary action. And timing wise, it just also works like perfectly. So you could take this and wrap it around the middle, and you can see what I'm saying. Like it's mathematically super tight. It's like a perfect sine wave. So I'm using this as one of my guides for possibly how price action moves, because again, timing wise, it's been really tight, including the bottom, recent bottom. So again, going back to this top, and you go back through the recent bottom, this predicted that we would hit once again the lows, which are around $7.20 here, $7. We'd hit the lows right around December 12th. Well, again, if you had let's say you had bought a call when it hit bottom for that top, you would have made money. If you bought a put after that call went through, on the next top, and you got it for December 12th at $7, you would have been 2 weeks early, each case 2 weeks early. So these are things that we're going to like kind of look at today, because there's something else that needs to be addressed, and it's like the bigger part of the puzzle. Not here. It's a bigger part of the puzzle. Like, and basically this right here is just a projection of this reversal. So at this point, right, this should have, I say should have, if this were following perfectly, I made a point of this last week. This is just a recap, okay? I'm not going to sit on this forever. I made a point of this last week. If this had done exactly what this did in reverse, we were right. This would have come up to 860 and then come back down and found higher support at 7. So the breakout would have looked pretty much like a classic, and it might have come lower, but it would have come up high early. So interestingly, right, like those targets, I think they just were not, the demand wasn't there, but it would have done this and then probably, stayed higher, obviously, up at the top. In reverse, you can see what I mean, because this is a 50% line right here. So about 50% is where this came back to, and then it went low. Again, we're looking at this like rotationally. So this would have come up to what, 860, which is the middle, or you say 875, come back down, found support at 7, and then would have went back to the top. Notice that we have not yet come back to the top. So on the rotation, there is no top. And the timing for it is obviously suspect, because it hasn't gotten there yet. But you can see that it should hit a top around January 17th. So if you look at the rotation, you would definitely get back to the purple to check it again if the rotation, this is an if question, right? We're not 100% sure rotation is going to continue forever. So in theory, you should be back up to the purple area by, which is around $10, right? By about January 17th. So that's what this measure is right here. And you can see like the way that I've measured it out, it's really just about, and I kind of have these extra lines here, but it's really the same things like I'm looking at. They're just, the way that I've spread them out, you know, might be a little odd, but that's the way I did it, okay? So I know that this might seem a little wonky to some people, but the more that you sort of look at this and think about it, the more you start to realize that there's another pattern here that's been going on, and it's one of distribution from the top. And this is where I'm going to maybe lose some folks because it's been a long time since I've talked about this. But there was this old chart. Good day. There's this old chart called the mother of all charts, and it didn't work out. Okay, so I haven't really talked about it in a while. Every now and then it comes up because what the mother of all charts was back here. Very, very brief explanation for those that may not have been here, okay? Back here I had this idea that what we might be experiencing here in this bounce and push-up was very similar to what we got here, and that we were going to experience the same thing, but it was going to like expand outward, and that we would eventually have this massive drop down. I know, ironically, that it did happen, but it didn't happen the way I thought it would happen. I thought we were going to continue up. Hey, be quieter, please. You're being real loud. Can't think real easy. My kiddo's home, which I love, but he can be really loud sometimes. I thought this whole concept right here was going to expand outward. So at the time, the way I was interpreting that was this particular move and like this particular move were basically the same move. And I know this sounds weird because you're like, that doesn't make sense. Why would you think that? But that's what I thought. So I thought we were going to come down and then have this kind of big move up as a response here. Go elsewhere, please. You're not listening. You're being louder. You did the opposite of what I asked. You can give them treats. So that was the mother of all charts, okay? And I had this whole like diagram built out for it. But what that came from was this concept of like walking down. And what I thought was that this guy right here was going to be the next step ladder up. So I thought we were going to like reverse. Hey. Last warning. Thank you. I thought this was going to be the step ladder up, and now we're going to have something like that where we come up to the top or something like that. Now, it kind of did start to do that, and at the time, there was another target here that would have gotten us to that point, and it never happened. And it ended up being like a 50% move, like only like a halfway move to that target, and then it distributed. All right, so why does that matter now? Because yesterday I was thinking about how I had left, and so this is kind of the last one I was going to mention. Yesterday I talked about how I had I was telling people on Discord that I kind of was looking at this bigger puzzle piece, and iterations is this concept that fractals repeat themselves within themselves, and so you see the same thing in the micro that you see in the macro while the macro is being formed out. And it's not perfect because it's human interpretation of it, but mathematically speaking, it's pretty straightforward. Basically, like the parts equal the sum of the parts, if that makes sense. So the shape of the parts equals the sum of the parts. And if you look up the definition of a fractal and then you start staring at the stock market, you start noticing that they're everywhere. sometimes they're not very reliable because we're pulling fractals from areas where we want something to happen, right? We want like a certain result. So if we want to see upside right now, we're going to be pulling fractals from over here, right? Now, we're always pulling fractals from like the January run because we're always thinking that it's the next January run. So you're always pulling fractals from here. And you'll find that they kind of match. Right? Like the setup can oftentimes be really similar. And it's not unusual, but the question is it as big of a bottom? Does it have the same attributes as that bottom? And this bottom is pretty unique. I mean, it came during COVID. This was the beginning of the meme era, right, in stocks as we know it. And there's a lot of things here that don't happen anywhere else. And I've done a thorough enough analysis on that at this point after 2 years to just kind of say, yeah, sometimes you see stuff like this bottom, for example, with the M crosses and junk. Sometimes you see this buy up where the cat ears kind of go upward. But it's pretty rare, and when it does happen, it's usually very obvious that it's about to happen, and it's not like a copy paste fractal that I would use very often. So, all right. So without further ado, what in the world are you talking about when you talk about iterations again? So here's where the rubber meets the road here. So what I'm going to do is, before I try to show you what I've done here, this might be kind of confusing. I want to give you the very, very basics. And then I think from that point, you're going to be like, oh, okay, I see what you're doing. And hopefully you're not going to think I'm crazy. Because the simplicity of this is actually, I think it's pretty straightforward. Like I think you can, once you see it, you're like going to be like, oh, okay, I get what you're doing. It's actually really simple is what I'm trying to say. All right. So this is the repetition, right? And I know I've talked about this also recently, so if you've been kind of tuning in lately, you probably would think, yeah, you've already talked about this. This is the cat ear, right? And it's not necessarily perfect the way I have it drawn, but this is it. And the cat ear is just a distributive motion. So this is one distributive motion right here. This is one giant distributive motion here, and then there's a micro one here. Again, I know this sounds kind of silly because it's like, well, if you knew this, then why didn't you just short the stock down? But I did know that this was a possibility. I just didn't think it was going to happen. Like, it seems so far-fetched to me, and it seemed like that couldn't possibly be the end result, right? So I just ignored my own analysis. But especially back here, when we were doing this stuff, and I did the mother of all charts, I thought this was an expansion. And I started noticing after that master fractal, which comes from right here in December 21st, that's where that whole thing comes from, that I thought this kind of all looked like the same thing. Like this looked like a bigger version of what we had just experienced up high, right? You see how like this is basically the exact same thing? And when you look at the parts, you can even count the top, and it's called like I call it a four top, but it's just basically all these parts. And it's just a distributive motion, right? And it's those quote-unquote cat ears that I like to talk about. That looks the same to me, this tiny little guy right here. And I was like, well, that's kind of weird, right? And then you start thinking about the big picture, and you're like, well, what about the next one, right? And the next one, you can just take the same thing. It's all within itself, you know, and apply it further. And as you start doing that, you start to kind of come to this realization that we might just be in like a massive iteration of like a huge flipping distribution. Because if this all pans out the same as this, then you would just expect it to possibly continue until it doesn't, right? And the whole concept of iterative moves is that you're basically generating a pattern of trading that works efficiently. So it's telling you in the micro here early on, like what does distribution look like for this operator, right? And then they keep doing it, and they keep doing it, and they keep doing it. And so eventually you get to this point, and you're like, now I see why you might have noticed this, Booksy, because back in the day when you were doing these targets, you compared this region right here to this region right here. And even though I did that, I didn't have the foresight, for whatever reason, to consider that once this happens, that it's going to break down. In fact, once it got to this point and we failed to break out, I don't know what it was in my brain, but part of me just decided it's not the same anymore. And therefore, it's not going to do the same thing. But I was wrong. It was the same. And it did do the same thing. And it's unfortunate and frustrating. But the main reason that I thought that this was wrong was because I was looking at the master fractal. So again, I had one piece that I was looking at, but I wasn't looking at this like it was going to continue indefinitely. I know what you guys are thinking. Well, it's too late now, right? And the answer is no. And this is where things get kind of spicy. This is where things get good. Because we didn't make the creek jump. And this is where there's a major difference, right? It's like, it seems like we didn't make the creek jump here because we just didn't, right? And we failed to come up high. And it would have made sense that we would have come up to near that level, you know, which would have been up here, at least to here, right? To 230 something. Of course, it says 230 now, but I think back in the day it was like 36 or 39 or something like that up here, right? It would have made sense that we would have come up there and we would have set up on top of, instead of coming down, right? But here's where things get kind of crazy. So if you're following me so far, that's the bars pattern version of this, right? And you'll note that this is like the micro iteration. Like I'm taking it, I'm just drawing it out for you so it makes it easier to kind of follow. And I think it's fairly, again, it's fairly simple. But here's the crazy thing is I used, this is where the rubber meets the road. I'm losing some people, I know. But I used the micro iteration from July to accurately predict where we were going to go in August. And I got 2 targets. And it never hit the second target, but it hit the first target like almost exactly. Like it was within $1. Like it was really close. And to the point where I was able to capitalize on that and make a lot of money really fast. Okay, it was from this buy-in here. Like I got in right before we took off. It was great. All right. If I can do it once, I can do it again. And I know it seems like it's a completely different time for AMC, but I just demonstrated to you a minute ago that that's not actually the case. Like, yes, there's a massive influx of volume here. It seems like liquidity is completely different. Yes, it looks like this thing could have this kind of crazy upside or crazy downside. I know people have all kinds of targets all over the place. I've already come up with the 1440 because of possibly come back to retest that trend. Yada, yada, yada. Everyone's going to say it's different. I agree. There's a lot of differences. But if this is still accurate, if this is still pulling a rotation and it's doing it where it's time perfect, you know, monetarily is price perfect, I don't think it's changed as much as people may think it's changed. And it still seems to be abiding by some of the exact same things that we've already seen. Like, look at this for a second, you know, just take a look at this for a second. Look at the big picture and you'll see what I'm saying. Like, it's very similar in a lot of ways. You know what I mean? Like, there's a lot of similarities in terms of how this thing is pumping and distributing. You're still getting this massive cattier top, right, that drives down the price lower, just like we did here. And it drives it below the previous bottom, right, which is like what happened here. Like, there's a lot of things going on right now in this micro that look just like the macro. So I don't think that it's all smoke and mirrors. Like, I don't think that's the case. I think there's a mathematical simplicity to it, and it works. And here's where I'm going to kind of park for a minute, because if you're still here, you're obviously following somewhat, hopefully. And this is where things get kind of interesting, because if you look at extended hours price action, right, we had this pump up to like right here around 72. Now you can't see it regular trading hours, but we did come up and we kind of kissed the top. So this becomes efficient, a very efficient and succinct example of this same thing right here. And then there's a rotation that occurs here as well. And it might be occurring here as well. Do you understand what I'm saying? And again, before you kind of say, well, dude, I don't know if that's quite right. You know, you could say that for anything and this and that and the other. Look, it happened on the first one. It happened on the second one. All right. And in both cases, you actually get this really strong like parity of motion where it's very clearly like the same it's the same programming, like it's identical basically, right, is what I'm trying to say. And it's this programming that sends you up to check the midline here, right, and then propels you over it, drops you down, buys you back in, goes back to the top of this widening, and then redistributes along what seems to be this kind of midline, okay? And the more you kind of stare at it, the more you start seeing there is a simplicity to it. And again, you might say, well, yeah, but it's hard to draw these lines. Like some of them go below, some come above. It is. It can be a bit challenging, but they're all the same, right? So again, it's this idea of like rotation, 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 rotation. And then check out where this guy goes, right? And we're at the bottom again. And here's where things get kind of exciting, I guess, if you want to call it that, is that that after you come through the bottom, whatever happens here, right, you typically make a run towards that middle. Now, the way that I've drawn the middle, I think is debatable. But what I'm looking at specifically, because it doesn't really act like a perfect 50-50, early on in this trading, I think it does. Like really early on, you can see that there's a sort of a simplicity to it where there's a lot of hits on it. You can see it redistributes right below it. There seems to be, you know, an equal effort, especially in these rotations, to kind of try to get down to this like middle line, right? There's a wrapping around of it right here in December, things like that, which also happened back here on the micro. You can see it pretty clearly. We didn't get that here. It just kind of passed through it. But I think it's done because it already moved through the middle. The thing is that way later, right, in the trading of this stock, you're still respecting it. So this is from back like here. So I'm like looking at this and I'm thinking like, I remember when this was going down, thinking like, that's a bizarre line to be following, you know? Like in my mind, I'm like, that's so weird. Like why that one? You know, if we were going to pick something to follow, this didn't make sense. If you look at it locally, it just seems to kind of come from nowhere right here. But if you go back to the beginning, it starts to make a lot more sense because you're like, oh, okay, well, this is kind of like the middle of the structure. So we're coming back, and this is affirming that middle and then heading outward away from it. The same exact thing that happens right here on the creek cross. It's basically identical from here to the end. And then you see the same thing from here to the end, right, before the drop. And I do think the same thing happens up here, but this is a very volatile time, but it's basically like right there. And it's hard for me to say like exactly where that's supposed to be, right? So what's the point of all this? Well, if this is indeed true, and I think that it is, then what I'm looking at is this is the chopped off cat ear, and it's huge. I think it's humongous. Another way you could draw it is if you don't like that idea, you could do this being ear 1 and this being ear 2. And I think those are both accurate. Okay. And then this would be like the paw structure. Okay. Or you could say this is the paw structure. It doesn't really matter. Because in the end, we're just looking at the patterning right now anyways. So why does this make any difference? Again, it's because it's repeating. All right. And it's repeating to a certain end. And I think when we look at the micro, we can start to see what that end might be. This like slumping down to new lows isn't met with no reaction. It's met with a really strong reaction. And then this is where, in my opinion, we can start getting more technical about it, because once we understand the concept, oh, we're distributing along this line repeatedly. We're doing the same thing over and over again, right? We get an up thrust to the midpoint. We go back down and test the bottom. We come up high in this downward trajectory. We redistribute it top to top. We do it again. I mean, this happened 1, 2, 3 times already. Maybe it'll happen a 4th time, maybe not. But this is where I really got excited, because I was looking at it like, all right, well, let's not make it a theory. Let's just kind of use it and try to measure it out. And this is pretty cool. So there's a marker that gets hit every time. And it's fairly straightforward. So there's a low dip that happens on this cat ear. And each time that dip happens, that ends up being where you're going to come back to in the future. So if you take the low dip on the cat ear here, now you might say, hey, we didn't come back over here. No, we didn't. But we came back in that big up thrust, and we hit that. And again, yeah, there's a hook that happened right here where it kind of comes back up and retests it during the LSPY phase when we're kind of marking down the big S curve. That also helps, you know. So you're basically like, well, it's just coming back to check the floor, Booksy. Yeah, it is. But it just so happens that that lower mark on the cat ear works really well. So, and it's not the first one, it's the second one. I'm not sure why I did that. That second mark. Sorry. So the second mark for us right now is where it finds support, basically, before it kind of pushes back up. And there's only a couple possibilities in our local time frame, and they're all right there. So were we correct to think that it's probably inevitable that we're going to come back up to that 45 area at some point? Maybe. But we've also heard people say things like 35 and this and that. And I'm kind of like, I don't know where that comes from necessarily. Right there. This level, which, you know, previous bottom, right? Support. From an iteration perspective, it's the same as what's happened at least 2 times already. You know, maybe 3, but I'm not going to go in and look at the micro. But each of these has worked out 3 times. So to me, like, this is pretty cool because you can look at this and say, well, hey, there's a specific pattern here that's been appearing where after we come off that midline, we drop down back to the bottom, and then we return back to the midline. And just to give you guys a sense of why this would matter, this is like a 460% move. The trick here is that, and it is a bit tricky, there's something interesting that happens. On this guy, it comes all the way up to the top first, and then as a result, I think, to some extent, you don't ever get the hit higher. On this one, it doesn't actually make it there. It doesn't come above, and then you do come and hit it later on. So there's 2 different possibilities. One is that first initial bounce has a massive reaction back to the top, and then you end up walking down lower on the second one. That's why this never came up, hit that target we were thinking it might hit. It didn't need to. It was bound by the channel. It never broke out of the creek. It just stayed below it. Whereas this guy did. Okay? And the reason is because it initially didn't come up that high. In both cases, after this initial push-up, and by the way, I'm not going to like zoom in like indefinitely here, but there is that little bounce before the move up. And in both cases, what happens here is that the S-curve walks right down beneath that midline. And it gives you that structure that we were just talking about, right? Where it started cutting through the middle here. It's like a bow and arrow. That's what it looks like. And in both cases, it gives you the price target, should you be able to find that accurately, right? That 50% mark or whatever it is, okay? Now, I'm not worried so much about that because I don't have this yet. So that'd be like jumping too far ahead. But what does tell me is that that red line is going to be probably, if we have a push up, is probably going to be the place where we're going to want to not fall beneath. Back in the day here, Stockfather, around April 20th or so, Stockfather was like, we're done. And I was like, I don't get why. And he said, because we dropped more than like 50%. Well, guess what? That 50% marker was like right there. And basically we came back below the, the top of the previous range. Well, it mathematically works out. Surprise, surprise, right? Here's a place where that didn't happen, right? Is that it didn't happen here. So you did have a very similar move, like on this bottom and this bottom. But what happened is that when this broke above, it found support and then continued. This, on the other hand, dropped through. So if this had done the same thing, for example, this would have come down and then like had a big S-curve down. It would have looked identical. So why does that matter? Because we have that red line. It hasn't changed. It has not changed at all, I don't think. And I believe that that red line is probably fine right where it is. And I have a whole nother chart built up. So what I'm going to do is, let me see if I can get rid of everything up to, I'll keep the vertical lines, why not? But I'm going to get rid of all this stuff. And then what I'm going to do is show you what I've got built up already. Now, this might look more confusing, but that's because I'm doing all this measuring crap and I'm trying to figure out, sorry, but that's just what it is. It's just a bunch of nonsense, really, but it's really for me to try to measure a couple things. So I'm looking at trajectories, like what trajectories were mirrored here, right? At 45 degrees, where does that come from? Well, it comes from the previous bottom. And so I think if you were measuring this, like for example, in an Elliott wave, you might be looking at this like this is bottom, this is top, this is bottom, this is top, right? And you can see the sine wave there. And then these are your trajectories in and out. So I've got some of those. And then I've got this really special box. It's just the measuring box. I don't know. It's like one of the most basic tools. I can't even find it. I don't use it that much. Just date and price range, this guy. And what's great about this is that this box gives me a way to measure moves. So what I started looking at was I would take this move right here, right? When are we supposed to, like when, this is the level we were just talking about, right? Where's the midpoint? Where does it intersect that red mark? And this is crazy to me, all right? So this is what I got to yesterday was like, I went through and I said, all right, I took a box, whoop-de-doo, right? You take a box, you measure it out, you say, well, I don't know where the midpoint is, but I know where that red line is. So I start measuring to the red line, and this is what I found. If you measure from the drop-off point, which was that little guy that we talked about over here, remember the bounce? I said this is where we're going to come back to later. The drop-off point, now it says 187. And you measure this box along the red line. So you see how that marker, the intersection is along that red line? That gives you a 50% cross, right? Go to the lowest point, right? And you can see here that this is the lowest point that this structure hits. It's right down here. It says 53 now. Now do something amazing. Take a cross section of that. Go from this corner up to this corner. And then tell me what you see. Well, I think it's obvious, but I hope you guys can see what I see, which is that not only did this hit that middle line, this ends up becoming the place that it pivots. This is where the distribution happens, and it's where we come back to later. So this ends up being the intersection of, it's $6.33 right now, AMC is. So it's come back down pretty low, but it's not beneath any kind of major creek yet. We're just kind of chilling out. I can pull up any of these, really. They're all fine. They all have different levels on them. I'm not particularly interested in this right now because I don't know if this is going to break out yet. It's got to get over 652 to break out, and it's not there yet. So maybe it's breaking out, maybe not. This could still slide back down. And main reason I'm kind of concerned is volume. Volume just looked kind of weak this morning. We'll see. It looked like shorts covering. Because volume has been dropping even though we're going up. It looks a little bit better now, just peeking over at it. Yeah, so basically this triangulates. And if you're having trouble seeing what I'm seeing here, again, like this is pivot. This is the one point that I looked at. This is the second point that I looked at. And then this is the third point. And then what it gave me was this structure here. So I was like, hey, that's kind of interesting. It gives you exactly where it's going to hit those two markers. And I think algorithmically, that's probably what was going on. That's not enough, though. That's just one example. So it has to work twice, right, in order to be efficient. So again, I went back to the first one. And I said, all right, well, let's test this theory because it's just a theory, right? Something that happens once and not repeatable isn't useful in scientific terms, right? So you have to make sure that it's useful. So basically at this point, I tried it again by going to as low as I think this goes and making sure that's on the red mark. And then you take this guy and you do the cross section here. And I think this one's a little harder because I don't know if I have it drawn correctly. I think this is supposed to go down here, but whatever. But again, same deal. Like, where does this intersect the outer marks? And it's all the same. Now, does this break down along that midpoint like the second one does? No, it doesn't. So that tells me that it might not be as important, that this happens to be right on the center. It may not be that important. But what it does give me is it gives me a really accurate reading of where I might expect those prices to hit. And it makes sense if you think about this in terms of trajectory and waves, because a wave top and a wave bottom mathematically should be pretty much on point, but this is at an angle. And the biggest problem with, in my opinion, with TradingView is that you can't rotate and change sine waves. And I don't know why, because I think the math for that should be pretty easy to program. They've programmed all kinds of crazy stuff in this program, but for some reason you can't turn and pivot a sine wave, which drives me bonkers because I know that if we could, and we could alter it over time even, and program it to like change value over time, we'd probably find out that there's a really simple way to do that, right? But I'm doing it by using angles, mathematical angles, and they're giving us the angles. So here's where I was yesterday and where I got stuck because you might say, well, dude, why can't you just do it? Then just do it. Like, tell us what the angles are. Well, this is kind of where I landed yesterday, and I don't know if this is the best that it could be because there's some things here that make sense and there's some things that don't make sense. So if this were the case, then we should be intersecting that bottom line, or we should have intersected that bottom line again right on this angle, and we didn't. So the way that I did it doesn't really make sense right now because the line should be going through here. Does that make sense? So just change it, Booksy. Well, I will. I will change it. I'm working on it. The other thing that is challenging is that I know that trajectory in and trajectory out tend to be pretty similar, and they come from the first cat ear. And I know you guys are like, probably, again, this is getting really deep and not easy to follow. But the first cat ear is the left part of this cat ear structure. And so it would be this top, the August top for us right now. So I know that trajectory in roughly should be the August top, but we don't have the bottom, or we don't know if we have the bottom. So that doesn't help us, right? We know we have one right here. So I went back and I looked at the M cross, as I call it, which is this guy, where we jumped over. You see where these 2 points are? And that ends up being a pretty solid line all the way down to the bottom. That acts as a decent estimation of trajectory if you know how low it's going to go. Again, how do we find out how low it's going to go? Well, in every case, if you were to drag a box along this 50% and you kept it on that 50%, you could tell how low it's going to go as long as you have this counterpoint. You have to have this point, and we kind of got it. So this sort of tells you like where it might be. It's a way of like triangulating it pretty quickly, and it worked. It worked at least twice perfectly, okay? The issue is that right now, I can't 100% know where that is. I think I got it right. I think it's this pink guy. where it's these 2 points right here. So I think that this is the main trajectory down. And then you guys are going to be like, well, that doesn't look right, Booksy. Look at that line. That pink line is just doesn't hit anything. It only hits like 1, maybe 2 points. Can't be that bad. Yeah, but then look at it in the local time and tell me what you think. Look at where that pink line is right now and tell me that it doesn't matter. Right? It matters. It's definitely respecting it, like 100% respecting it. It's been our barrier 1, 2, 3 times. I mean, really the only time we crossed it was here, going into earnings. That's it. And every other time we've kind of rejected along it. Let's call this like, I don't know how many times it hit. 1, 2, 3. I can see wicks all the way up to every single day almost. But 1, 2, 3, 4, 5, 6, 7, maybe 8, maybe 9, 10, 11. We know this area, that's the same one. So do I think that this is probably right as our trajectory line? Yes, probably. So that pink trajectory tends to be a little bit wide. It does typically point to the bottom structure, but it's not perfect. So if I were looking at this and I were saying like, well, where do I think we are then? Where are we in the scheme of things, That's debatable. I think this is where things kind of get a little bit murky perhaps because it's not the same every time. And when you look at, like this one I did differently, but it should be going from here through like here. What I can say is it seems that once we get across that pink line, we're setting up a bottom. So I would say that no matter what happens, because in both cases we have trouble getting across it once we're like kind of pinned and we have to like retest it. That's what happened back here on February 3rd. We had a big push up and then we go down for a spring and then rock it. It doesn't though tell you exactly where that bottom is. I found another line that I think might do it, but it doesn't really make heads or tails of anything. It's just kind of like, well, I can see it because it's retrospect. That's not enough for me. That I can't use that in future prediction. So I did do that line and estimate it here with the blue one. I don't personally think this blue one is necessarily right, but it's kind of like the next best thing that I have right now. It's probably going to change because I can't quite figure out where that blue line came from. I think that's like the trajectory line, if you're using these as a matter of 50-50, and you can kind of see what I mean. Like this kind of gives you the trajectory. Does it matter? Maybe not. As if you already know where it's supposed to intersect the outer mark. Who cares? I don't know. So the question is like, where are we in the midst of this? And then can you measure it? Well, if I know the pink line is right, then as soon as we jump this pink line and retest it, we should get a pretty big move to the upside. I don't know for a fact that it's going to go super, super high like this one did, right? Because some of you might look at this and say, well, dude, it's going to come rocketing to the top and just go straight up and hit. By next earnings, it's going to be at 34, and then it's going to plummet, and then it's going to come back up, but it's not going to come as high, and it's going to be over here. And it's going to be just like it was here, and then redistribute again. Okay, fine. But it doesn't happen the same way every time. The only thing that upthrust does consistently is it passes above 50% right here, that red mark, and then distributes beneath it. Because the first time it doesn't do that. It just comes up above and then distributes, and then it comes up later and hits the outer mark. Both times it comes and hits the outer mark. That's a given. It's going to come to this outer edge here at some point, in my opinion, right? And I'm trying to prove that this is accurate, but you'd have to follow this whole line of reasoning to get to this point, right? In my opinion, I'm not a robot, and I don't know if I'm 100% right, but I think I'm pretty darn close to what's going on in this distribution cycle from an iterative standpoint, okay? Now, here's where things get kind of weird, is that, again, you can't just do one thing. So if I were to say like, hey man, that's it, that's where the answers are, then what I would need to do is take this marker, I need to drive this backwards to get to like some 50% line. I know you guys are looking at it right now like, wait a minute, dude, that's like right on earnings. Yeah, I know. It is. And then I would take this and drive it back up to here or something like that, and I would just keep doing that until I got it right. Keep doing it until it's correct. Well, It does turn out, though, that there's a pretty strong trend here upward. And I think that that might end up becoming, I'm not positive about this, but it could end up being that that's the place we end up finding that, yeah, that's probably where it is. I've looked at it a few different ways to try to identify that trend. And it's not easy because when you're doing this and you scale it, it kind of changes the way you move boxes around. So I've been working on this a lot, more than I should. And you can see I'm getting pretty close to where that uptrend is right here. Like it's getting fairly close now. So here's the bigger problem, I suppose. It's easy enough to find one of these. So if I know where this is, that this is the hit point, I can see it. It's clear. I think that that's where it is. I think that's the intersection. This actually adds up pretty well. Then supposedly $12.12 would be roughly like the halfway point. Again, does that kind of make sense? Kind of. I mean, it's basically where we were like up here with the preliminary support. So it makes sense it could be a place that we would come back to. When I go back to other times and I look at these early bounces, it does seem that the very first bounce is never quite high enough. Like this early bounce, there's like a double bounce here. It doesn't come all the way back up to the top, right? It does check some, somewhat of a 50% marker on this whole box. You can see it like ticks it, but then it ends up coming back above it later. Same thing with this, is that the early bounce here does kind of come back up like a 50% retrace almost on the box. But it's not really a 50% retrace on this particular line. Does that make sense? So this 50% marker, in my opinion, is like the rotational symmetry marker. So this is where the sine wave comes around. Does that make sense? In the long run. Okay. But it seems to me that there is some kind of a gravitation towards it early on in the structure. Why does this matter? I know you guys are like, this is going on forever. Well, it matters because when we get down to this, we have to guess. Like there has to be some kind of an estimation made as to what this is. Is this the 50% marker? Is that early reaction? And I think it is. And so I think it's very close to being right. So if that's the case somewhere, and I can't tell you exactly, but I think it's somewhere between here and here, right? You've got that 50% box line that I've got drawn. That big yellow box, that should triangulate for us to some degree, right? We've got the red line. We think the red line's right. So all we have to do is then just trial and error, move this crosshairs. You can ignore this for a second. Move the crosshairs along the red line within this box. And this gives you an adequate kind of range for where this price action might be going, right, in the near future. Now, why didn't I just figure it out though? Like there's got to be a reason that you're not just presenting. You obviously worked on a lot on this book, so do you not have the answer? Well, I don't have the answer because there's a problem. There is an intersection on this pink guy down low, and you can see like previously, like that doesn't matter too much. Sometimes that indicates where that spring bottom might be at later on. You can see it gets pretty close. It actually jumps over the pink line, so it doesn't have to land right on it. But in both of these situations, the box is bigger than that pink line intersecting the bottom. And in this situation, it's just not. If that ends up being like that 50% area, there's no way to draw this. That's as low as I can draw it right there. To where this intersection, and I've got an extra line here. So let me color this like blue or something. I'll just dim it out for a second. There's no way that this box gets down to that bottom. Like it doesn't encompass it. And in every other situation, it does. What does that tell me? It might tell me that we're not going to get much lower than this bottom. What is this bottom? $3.50 or $3.30. There's that number again, Booksy. Don't you love that number? Yeah, but that's just what it tells me. I don't think that it's necessarily going to get lower than that. And I know I've talked about $1. I know I've talked about that number as a kind of a scary number, but I don't necessarily think it gets lower than $3.50. And I found that number multiple times previously before we had all this crazy stuff happen. It seemed to be the target in mind back here. And we were sitting. The lows here were at 350, 360, y'all, on AMC. So for AMC to kind of reset, it would have to come down to like the same spot. And I know it would be significantly cheaper, and that's what you're probably thinking. I'm thinking that too. But you got to remember, like, I'm not necessarily at this point trying to catch some explosive move back to all-time highs. What I want to do is make some money. So what I want to do is catch this move. I want to get that March move, the one that's happened as a big bounce, then see what happens. Because it could be that our March move, like it happened here in January, doesn't break down beneath 50%. In which case, you're going to get that reactive move, to the upside. And then you end up with another move back down, but it doesn't end up losing, I'm not drawing this really badly, but you get what I'm saying. It doesn't end up losing the 50%, and then you end up with this breakout that goes up towards the top, and you essentially get another January and June type setup. Probably wouldn't be that high, but it'd be like this, right? And then you'd have another push up to the top. And again, you might say, well, it's kind of ludicrous. Like, I don't think that's going to happen. Well, look, if the goal is only to get you to $34, if they don't have any desire to break it out right now, at worst, your 50% is now, right now, based on the lows that we have, sitting at $14.40. Where did that number come from, Booksy? I don't know. That's weird, right? But it also makes sense because that's the top of the preliminary support range right up here, okay, when it was dropping down, that rotation, okay? So I know what I'm saying sounds a little bit like out there by saying like, hey, it could be either way. That doesn't really give you a price target. But if I can identify, again, how do I get to this low? Where should this be? And if I can do that efficiently, then I should be able to get the box shape and all this stuff triangulated just like we did over here to some degree, okay? Assuming that it's doing the same thing again. Come back to the rotation. Because this is where, in my mind, I got to make things fit. And if they don't fit together, then it doesn't make sense. So originally, in the rotation, I thought it might come down to maybe 540s. I said 490s because that number seems to come up a lot in measurements and in price targets. But I thought we're probably going to come down to like 550s once we failed to break out here. We didn't come that low, not yet. We'll see what happens today and tomorrow. But I thought we'd come down that low. And then remember, we just did a rotation target. I just talked about it not that long ago. And I said that it should be approaching once again by January 17th. This 960 range up to maybe like 12, okay? Now that seems like a big window, but 960, remember that was the breakout target for the wedge, okay? That's just a Bulkowski target for this wedge breakout. The wedge breakout target of 960 happens to intersect the sine wave that I've measured right on the top of this downward trend here, which again, it's kind of just like a basic kind of creek line that you might draw here. So the 960 mark is pretty good. I think it's a pretty decent target chance. The other mark comes from the rotation, and that's the idea that after you do that, you might see a push up where it kind of tries to peak out, and it would come up to the top purple line. Well, why do you think that could happen? Well, because that's the reversal here. And thus far, had you played 1, 2, 3 times on this reversal, you would have hit every single time. So for at least 3 times now, this would have been a good buy. Like basically would have been a smart opportunity. 2.5 really, but you get what I'm saying. So for me, I'm like, okay, got these creeks. It's trying to push over them. Whether it comes low or not, I almost don't care. Once it gets over these creeks and presses them and jumps over them, I think from that point to about January 17th, looks like a pretty sure bet that this is going to go to the upside. You've got a low target of 960, 9s is what I've written here. You'd have to probably find some support. And then I think much like over here, you could see something like a double top. And then it might even go more like sideways for a bit before dropping down. Okay, because earnings is around the corner as well. All right, simple enough. That's an easy way to look at it. Good price targets. I think it might get there. Maybe it will, maybe it won't, but it'll be close going into mid to late January. Okay, somewhere in that pocket. Easy enough. I could get options contracts for farther out, maybe in February or something, that at least target that region around 10. Pretty simple, easy trade. Okay, that's fine, but then how does that fit into the dynamics of this bottom? Because even if you come up here, you don't necessarily find support, but what if you did? Like, what would happen, right? Well, if you found support, you'd probably head up high, and then you start looking at those other targets like 1440 and other things like that. But that doesn't match the rotation. So what happens in the rotation, very simply, again, assuming that this rotation did continue, is that you would basically double top right here. And does that kind of jive with what we're expecting? Yeah, I think so. I think it does, because we're talking about, once again, heading back down low, and there's not really a lot of evidence that you would just break out. At least according to the rotational symmetry, it seems like you would actually come back down and make a final low. So this would be like the lowest point potentially on this rotation for now, right? And then, you guys are like, well, what about way later? I don't know. Okay, I don't know how long you can rely on a rotation. I don't think you should rely on it. I personally don't think we should rely on it past the creek jump here. And it may not even be that reliable after this particular mark from back in April 5th, because this is that whole second ear. This is all part of a creek jump. So it would be like, at that point, you're kind of asking for a lot. You'd have to basically look at what creeks are there, and you'd basically be watching the creeks. I would not personally be watching the rotation, okay, at that point. But does it make sense that this could have like a double top here and then drop? Sure. So if this rotation were to continue, that's what you would expect. Some kind of a double top in this area, maybe 9s, maybe up to 12, maybe a little even higher. All right, we've got some cross sections here. There's this red guy. This is a direct copy, by the way. I know it's kind of hard to see all these things on there, but I'm bolding them all. This is a perfect creek cross, but basically it's the same angle as the one down here. And it just so happens that's the floor. So this is 166, 166. And you can see that that's the level we rode up from bottom to the place we broke out on the LPS. It's the same angle. So in theory, we should meet that angle again back at the purple line, which is really soon. But I don't think that that's necessarily the way it's going to happen. I'm using the rotation as, I think, a better guide. In my opinion, I think it's a better guide, because I think these can shift down a little bit or even up a little bit, and it's a bit debatable. So I still think it's this pocket right here. So we've got other things going. It's not just me saying, oh, it's a rotation, it has to do this. And then here's the kicker, right? Then I come back and I look at something like RSI, and you guys are probably getting exhausted at this point. But in RSI, I've got the cat ears. It already looks to me like this could be a double cat ear. But I think if that's the case, if this comes up again, this should be something like either this is going to break out and run, right? Or this is a distributive top. That's all the only options we have. So if this breaks out and distributes as a top, then I think this is the middle of the cat ears. Most of the time what you see is you see a triple 1, 2, 3 kind of thing, which we actually got there. This is typically what you see in a cat ear. And then you get this low kind of bounce. I know it looks exactly like what I'm drawing, but this is really what it looks like. Okay, and then you come up and you form like that really flat one. So this one tends to be a little bit more like pointed. Usually these two are pretty close together. It's like the same level, something like that. All right, this is the most typical that we see. So if I'm looking at this and I'm thinking, hey, maybe it distributes again, then it makes sense that it would distribute along that same marker. And in the end, what you'd end up doing is you'd end up coming back, and you'd have to come back to this line. So I've got it coming back to this because, why? Why, Booksy? Because reasons. Because it would come back to retest the creek cross. So this is a sine wave that would come back down. So does this fit like the master fractal schematic? Kind of. If it's going to distribute lower. Okay. All right. You probably are already getting like sick and tired of me saying this, but the rotational symmetry supports that concept to a degree. It does change right here because you can see like, well, wait, why don't you just use the rotation from that point and see what happens? It's probably going to meet one of those same lines. Like, so it'd be a little further along, but it'd be like over here, right? So maybe instead of that, it comes down and doesn't go as low, or maybe it comes over here and it takes a lot longer to get there by March. Makes very little difference. The point is it would come low into the 4s and 3s probably. Okay. So when I look at stuff like this, I'm looking at this like, all right, you've got 3 elements. You've got a rotation. You've got some basic stuff like breakouts, simple breakout targets, things like that that can be really helpful, support levels, and then you've got the iterations. Okay, and the master fractal, which is sine waves, is also something that's measurable. And this is here's the thing that's going to like tick a lot of people off, and they're probably going to like want to tune me out if you haven't already. Is that when you look at the measurements, I did a whole nother one on measurements. This is a crazy high measurement, okay? So I know what you're thinking is like, well, that's too high, right? It is, perhaps. Turn it off. Go to your room. You heard me. You heard me. I feel you, but it's not working out. Whatever's happening, you need to take a break. You need to take a break. Do I need to repeat myself again? It's what's best for you right now. Excuse me. Yes, it is. I think if you buy the right options, you're not playing with a casino. I think if you buy options that are too close to where you are, you're going to end up getting burned pretty bad. So here's what I'm looking at now. We have a sense of understanding with the patterning here, but what about timing? So when I looked at the timing, this is bizarre to me. Again, because I never really looked at it like this before, but this is exactly like 1 year. So weirdly enough, from here to the bottom, or excuse me, from here to the end of the structure is exactly like 1 year. When I looked at the larger iteration and I tried to determine how you would measure that, I know it's confusing. This is a really confusing chart. This is why I didn't show this one when I was explaining it. I just built it from like nothing so that you could see it, because this one looks like a mess. But when I did the measurement, the midpoint is here. It's actually, the midpoint is right when that Zern decision was made. The Zern decision was made on that 15th of August, and that's the midpoint for this structure because it's the midpoint right here as well. The midpoint for this structure, if you measure it out, is November 30th. So, well, yeah, I mean, they did, but what are you going to do about it, you know? I said something like that. I said that retail was a cash cow, and I got a bunch of people like angry. That was what happened like 6 months ago, you know, because retail is a cash cow for institutions. It's always been the case. Sometimes people take a lot of offense to that, but you have to understand that so that you don't approach the market like you're the winner. You're not the winner. You're playing against a house that has cards stacked against you. So instead, you play with what you know about about the house, right? And how do they play? What are they looking to do to get you out of your money? Okay. At the end of the day, it's just other human beings, y'all. Like, they have complicated programs that they've written, they've added to them. They have 100 years plus of experience in these firms, you know. They know what they're doing. But at the end of the day, it's humans you know, screwing over other humans. So you can understand that, or you can just ignore it. And a lot of people have ignored it to their own detriment. Okay. And myself, I'm included in that to some degree. So here's the thing. Okay. I measured from the fullness of the first iteration based on like where would it get to the bottom, where would it get back to the top, and ultimately like where does it come to this massive spike. Now this is not necessarily perfect, and I don't want to present it like it has to be exactly like this, but when I did the measurements from the rotation, let me show you what I'm trying to talk about so you can see a little closer. What I'm talking about is this guy right here. I know I've got all these crazy boxes and stuff. I'm actually just going to start deleting some things. It's okay. But I'm looking at this right here specifically, like this rotation. Do you see this yellow line? If you don't see it, I'll just make it super bold. Let's just make it like, I think yellow is a good one, super bright. I'm looking at this whole thing, and I'm saying like, how long does it take to rotate and come back to that level? Because at the end of the day, this distribution is met by an accumulation that then pushes it back up to retest that level. So the yin-yang that happens here, this sine wave, this is how long it takes. So it starts where? It starts at the bottom of the previous iteration. It starts at the bottom of the previous push-up. And then it recycles back to the next one. And it probably is recycling back to the next one. So when I did that, this gives a bit of a different target because it suggests that you would come up pretty high. It does suggest you could get to 52, maybe even up to 78. Very similar to the numbers that we used to have on the chart. But that seems to be very different than what I just talked about, right? Because you were just talking about only coming up to like 34. Again, things have to work together. So I might do something one way and it does one result, and I do it another way, it gets a different result. There has to be some kind of a middle ground compromise or an actual target. So when I looked at this, I looked at this rotation and I said, well, if you're assuming that the rotation is from this previous bottom, this is how it measures out. This is going to possibly blow your mind a little bit, and it's probably going to frustrate you as well. Because when I did that measurement, I was like, all right, so the middle is right where it breaks down. Like it's right on that November 30th or whatever. And then it drops. So I took the measurement from the previous bottom. I looked at that Zern decision, which is where it drops. That's where the iteration ends, y'all. And I kid you not, you can't make this stuff up. When you look at that and you mark it out appropriately, that rotation takes you right into November of 2024, which if you don't know, that's the election. So in theory, if this were to do a 1-to-1 with the previous one, the way I've measured it here, you would hit some kind of a high point around November of 2024. But those of you who are keen are going to immediately look at that and say, that doesn't look anything like the other chart you drew, though. Well, it doesn't and it does. Because on the one hand, if you look at the midpoint, it still looks very much the same. Like this middle area looks really similar. So this particular way of illustrating it draws out very, very similarly to this kind of 330 target in February, which seems to be a great intersection of a lot of things. Okay? And then it would rebound and come back up, and potentially at this point, you're not going to have another low. So this is just like one avenue where if it were to go low first, instead of having that big spike like it does here, and then later not make another high, if it were to go low first and drag down and then go up, you might have something more akin to this breakout. Now you'll notice that red line that I've drawn is missing. It's not there on this one. I could put this back on just for a second and you can see what I mean. It might seem like it's wildly different, but it's not that different. Like it's pretty darn similar because both of these have a very similar trajectory up towards what would appear to me to be the high where it intersects that outer trend. And you can see that though this intersection says $52, this one says $33, guess what? Like they're both at the same date. So notice that the intersection, and I didn't draw it that way on this other chart, But notice that the intersection here is hovering right around October, right, into early November. Like my mouse is on it right now. That says November 1st, 2024. So again, elections, right? So this concept of rotation would have us to think that at some point, by the time we're around elections, we would have hit that high. So that's a really far way off. It's a year off. That's a long time, right? It's 11 months. And that's not enough time for maybe a lot of people. They might say like, well, that's silly. Like, I'm not going to wait that long. But you have to think, if sometime between now and then, if what I'm saying is accurate, and if we're looking at this as a repeating fractal, I can say with confidence that if it repeats again, and it's done it 1, 2, 3 times, if it repeats for a 4th time, it's going to hit $34, which sometime between now and next November. That's a pretty darn powerful statement to make. And I know that a lot of people are going to be like, well, if it doesn't, you're in big trouble, man. Well, I'll take it as it comes, right? Like, what I'm saying is that I think that sometime between now and elections of next year, it's going to come back up and get to at least $34. I think there's another price target that's higher that would be a breakout. But that's like 54 up to 72. That's completely different, because if it does hit that, completely different way of measuring it, very similar methodology, but you get a different result. If it comes up to like 672 again, take that retail. You could be in a situation like that, right, where you're basically back in this area and you're broken out, but who knows, then we're kind of left in a limbo state again. We don't know what's going to happen, if it's going to continue or not. But it does make sense to me because of the levels that we've picked out, that if it were to go down low, you could get an easy move up to 34. It makes sense based on the trajectories. And if you were to go up high to like the 72, most of these kind of midpoints are adding up to something that's logical. Like the midpoint here being kind of right around $17, $16, which is where that gap is, and you have a reaccumulation and another push up. It makes sense. There's pockets here that are more likely to have, like this is one that's more likely to have some kind of a future support on it, right, than others. I think the trick for me right now, the thing that I'm really stuck on, is I'm trying to reconcile 3 things. I know they fit together. I just don't know exactly which one is best to kind of lead with. I think that the iterations that I've done here, the simpler one is probably the best one, because it's giving me a sense of timing that I don't have elsewhere. But what I don't know is I also don't know for a fact that we have done this big move up and down. So one of the things that I've been thinking about is like, it's totally possible that this goes up above. This does hit that $14 mark. We were talking about that for a while. This could come up pretty high and then basically come really low for earnings. And this could be one of those things where we end up basically bottom of the barrel during earnings, and then we get this massive spike to the upside. And you can see why that makes some sense, because it looks like a giant widening, right? And it could be a really long-winded boom, 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 boom. I mean, it's almost too perfect, right? It almost hurts my brain to just kind of go there, because I'm like, well, that's way too perfect. Like, it looks like it would work out really well. Totally possible. It's also totally possible that we skip all that and we just go right into that this has already happened, that we've already had that bounce. And this is the lower low. This is that bottom. And we're about to do our March move. And the March move would suggest that, no, you probably won't be down on earnings. You'd probably be up on earnings. So instead of being like really low, we rally into like February's. This is completely the opposite of the other chart, because basically one says you're really low, one says you're really high. Now, that to me frustrates me, because I'm like, they can't be opposites, right? There has to be one that's going to win out. So I'm working on trying to piece together the rest of it so that I can make sure that it makes sense across the 3 different ideas that I use, because it will. Like, it will make sense. Does this make sense according to rotations, not really. It doesn't really make sense according to rotations. But I say that lightly because in theory, like when you look at these rotations and the reactions, it doesn't really make sense either. The only thing we see that's consistent is that you do get this kind of stretch across the hole, right, at some point. But it doesn't always happen the same way. I mean, each one has been slightly different. They are checked, so that's the one thing that's sure of. So in the end, you might say like, well, that's all great, but I don't really understand how you would trade any of this. Well, at the end of the day, you know, when we look at this big picture wise, you can see like from August to where we are now, a 50% retrace would be $30. It makes sense to me that then the targets that we have might pan out because that's a 50% retrace on a huge move down. It's going back to check a level that we really didn't check up here around 34, that it's largely been untested. And in addition to that, you have all kinds of other stuff at play that would potentially influence, you know, why we would maybe go back up there. I don't think that part is confusing to me. I think the part that doesn't always make sense to me is the measuring. And that's the thing that, for me, my price targets tend to be pretty good. You know, when we were up here right before earnings, I said I thought we would hit $6. So we hit $6, whoop-de-doo. Was I correct about when it happened and how it would play out? Not really, you know. And that's the thing is like it's difficult to get timing. A lot of times the targets themselves are pretty obvious. Like I feel like this is a pretty obvious target to me. But I can't always pinpoint when, right? And I just know, all I know is that the way it's set up right now is it's between now and elections. Like I don't see another window for that. And it makes sense to me too, because of how perfect it was measured out towards elections, that might be accurate. Okay, that could be a really strong possibility. And if you think about it like rotationally, right? I know this is like another one of those things that's kind of frustrating. But if you think about it like a cycle, okay? And you think about cycles, look at what happened here, right? And then just take a look. So you see how this is like a quick up and down check of that same level right there. You could think about that as like one rotation here, right? And it's going back up and it ended up coming up pretty high. I think it came back above there. But that's one pretty solid rotation right there, you know, around, you know, this marker. And I think that the concepts that we're saying is that we're really just going to do a bigger version of that. It's not that complicated. So it's a big sine wave that comes back up. But in this case, it's not checking that higher marker. It's checking the lower middle marker, the 50% marker. So a retracement. There's other things we can derive from that, of course. I also looked at, because there's a lot of different angles that you can take in the market. You can look at this as a Fibonacci setup really simply, or you can look at it like waves, or you can look at it like a pennant or like a widening that's going to break out, or you think it's going to break out. You can look at this as creeks and yada yada. The one thing that I really feel like we should do though is try our best to try to find what we think is going to be that creek check. I still think that 350 seems the most likely. I found a pretty solid one that comes from April of 2019 through basically the bottom that we had in the January run-up, that pullback, that throwback we had. It does come right down to 350. Seems like it might be correct because it matches the angle of this topmost downward movement. So there's a channel here that adds up, and it would be like coming all the way down to get to the bottom of that channel and then having a reactive move. Another thing that adds up here is the levels. So on this other chart, I know it's a mess, but if you come over to the left, you kind of see what I'm talking about. I measured out equal part levels, and AMC has walked down these levels. And when we first started down here, I was worried that we were going to end up coming back down to 330s because that's the next bottom level. Like I separated these into two sections, 50% sections. But these are the supports as they've appeared. They've been pretty systematic. Ignore the pink line if you want, but hopefully you can kind of see those. And if you can't see them, then I'm sorry. I don't know what to tell you. But there's basically equal part stair steps up and down. Okay, and we're underneath one right now. We just did it. We just went from bottom to top, or excuse me, we went from entering it to top to bottom. So we just spanned the next one. And I've had these on the chart for a while. So, I mean, again, it's not like trying to make stuff up here. I'm saying this seems probable. So the next one down is at 336, right? And the bottom here seems to be right around like 580 something, you know, and give and take a few cents. I could be off by a little bit. And then going back upwards, you can see that next range is the 2020 area, which we just kind of jumped over completely. Like 100% right there. Just kind of passed right through it really quickly. So what we're doing right now is we're accumulating beneath the previous bottom, at least on the chart. And I think mathematically it works out when you think about the reverse split that that's the case, that we're at like 80 cents or something like that, right? But the idea here of 60 cents, whatever, the idea here of walking up these levels would also have to make some sense. So does that 52 lie on one of those levels? Yes, it does. Does that 34 lie on one of those levels? Yes, it does. Remember we were talking about that likely midpoint right around $19? That's also one of these levels. Like there's some key things here that are making a lot of sense that add up really, really well. And all I got to do is kind of figure out how they fit together. And I know it's going to be annoying, but if it makes it easier and you don't want to do any of that, you can look at this as just like a huge kind of widening. Where basically we're at the next upward stage. Why don't you just say that to begin with? Well, I did start with this. This is what I started with. I was trying to explain that the distribution that's happened has happened systematically. And it's iterative, which is good because it means it's trackable. But what then you have to then do is if you want to then derive some kind of price target, all right, well, all these cat ear tops are hitting this particular marker. And this one hits it again, by the way, in extended hours right here. Came up to the top again. So I know I've got it kind of drawn over here, but it did come up. Then this is accurate. Like this can be drawn out and it's correct. So if you don't care that much about all the mumbo jumbo iteration stuff that I've been talking about, don't worry, like it's okay. Like I don't feel like you have to understand every single thing that I'm talking about. That doesn't matter to me. What would be most important would be to recognize that either we're finishing the bottoming structure and we're about to have that March kind of move, or we're going to finish that bottom structure out a little bit more, then we're going to have the March move. So one of them, it just has the up and down, another up and down that looks more like the cat ear. I'm trying to simplify it, like something like that. And then it moves. The other basically just goes up into like the March style move. If it is the March style move, what seems likely again to me is that this followed the trajectory up. So what I mean by that is that it had there was a steep line that was created early on in this movement here on the bottom, and it ends up meeting that as well. So in addition to meeting like another way to triangulate this, right? In addition to meeting that top point, it was also triangulatable, if you want to use that word, fancy word. Triangulatable is not a word, Booksy. Well, it is now. You could use that, and you could use what I think is the only way to triangulate this. Either like, I guess it would be like this. Seems really steep to me, but yeah, I think that's correct. That's the bottom. That's the top. So it'd be like that. Maybe by March it's way up here, but I don't feel like it's another March move. That's 3 months away. I don't feel like it would go straight up all the way. And so that's why I'm trying to say, like, it may not be that case where, hey, it may not be that case where you have this one. It may be more like the previous one where you only come up like a little bit. This one's a little more challenging because it's so small. Anyways, there's a number of things we could say about it. It may not meet this. It may not do that. That's what I was trying to say a minute ago. Is like, this is why I'm stuck. Because I feel like there's a decent possibility that it does come back down and then comes back up sometime around November. And it gets to that point, you know, that we're talking about way over here. If that makes sense. Elections. Yeah, just sell all your shares, move on. I mean, there's other ways to trade this stock. We're not being quiet. Go to your room if you want to sing. Okay? I love you, but you need to be quieter. Yeah, sorry. He's just being real loud. I don't mind it, but normally. He's just a kid. That's how kids are. Yeah, this is roughly where that middle line is. Right? So it depends on sort of your outlook on the market as a whole, as well as whether or not you think earnings would be. I kind of think earnings might be this point. Like, I get the feeling it's going to be like right before we break down or go back up. Does that make sense? This isn't the only possible scenario, but it's just one that seems very likely given the fact that we've done it repeatedly. And then this is where you come down to like 350. And then you build your way back up. There's some kind of a cross, and we get this big rally in the end of 2024 going into the elections. And then that's that. So I think that the reason that I didn't do a video yesterday was because this was really long. Like, I just talked for like 3 hours or something ridiculous. And I still don't have everything I need to give an answer. And I think that's a bit frustrating. So the main reason why I didn't do a video yesterday is because I think I'm like on it, but I'm not there yet. Like, I feel like I'm right to the place I want to be. Like, I know that it's right there. Like, it's on the tip of my tongue kind of thing. But I haven't quite got it yet. And I know some people are going to look at this and say, well, it's just another mother of all charts. It's not going to work out. They're going to change something. Well, maybe. But they haven't changed it yet. This is not one that has changed. It's been repeated. So that cattier kind of setup, the distribution has been consistent, and they've consistently gone back and retested that floor every time they've done it. So I still think that on the big picture, going up to something like 14 does make some sense. There was another intersection here that we had talked about, this trend, right, of we haven't really gone back and retested where we did find support. You know, and I know I've got this drawn all kinds of ways, but that was a big one when we're talking about the mirroring that might be happening in this time frame going down. And this concept of like coming up back to that 50%, this sort of gives you the same vibe. Like, it does look like it could kind of get there and then find its way back down through it. And it would be an adequate test of the exact same level, right? Like, I'm retesting this floor. And then maybe later, this is where we see, I kind of drew this weird, but maybe later this is where we see that breakout matter, right? And that's why we come back to the top. For some people, they're going to be looking at that and saying, no, we just broke out of the channel, right? So that's the reason why we're about to go up. And it might be that, hey, this is it. This is right through the middle, you know, where we rotated. Could be this kind of situation where we're going to try to poke our heads out, push that resistance. Nope, not reclaiming that channel, so we abandon it. Or yeah, we are, and we just head up. I mean, I guess it's possible, you know. I get the feeling he's going to announce more dilution or something on the next earnings report, but we'll be up here, in my opinion. It seems likely. And then you drop down to like 3, and everybody's angry, and then it kind of builds itself back up again. and then breaks out sometime, runs for like a couple months, maybe a month, like 28 days or something. You have a really big move going into elections. Is it hypothetical? A little bit. But the more I kind of look at it, the more I'm like, nah, it makes sense. There's things here that they just add up. Like we start looking at the bigger picture, and I didn't have this before. I felt like I was kind of wandering around, trying to like figure it out. And there's a lot of things here that to me, they add up pretty strongly, going into the election, like November 8th being the area where we are basically testing the tops again of this downward trend. And a lot of other folks seem to think that might happen. Something similar might happen with the markets. I'm not going to comment on that because I'm just not a really real authority on that kind of stuff. I just don't know. I'd have to look. To me, this would be a smart way to get a lot of retail shaken out before you decide to do something else. Just have a massive like widening that occurs. So let's find the answer. You guys are like, great, now let's actually do it. You talked about it for 2 hours. Well, it's hard, These things are like, how can somebody obsess about something so much and then, what if you're wrong? I don't know. I mean, maybe I am wrong, but I don't feel like I'm wrong. And that's enough for me, I guess, for now. I think the big thing is this pattern here and how it has that return. Like it builds up this kind of like return energy that then comes back like a whipsaw, right? And it makes sense because of where those bounds are on these channels. I think the frustrating part about it is the measuring. Like I'm not really sure. There's not a strong, like consistent way to measure this. I think there's a fairly consistent way to measure it, but it's like really tight, the window. So there's not that many options here. And when you start looking at this, which is that cross section, it has to make sense. If it doesn't make sense, then with the rotation and other things, I kind of been throwing it out the window. So if the lowest we come is here in the future, like that $3 mark, it's possible that we can get that low. Then it would make it seem like we're not going to get to the top until February of something, like 2025. In which case, November might be like a catalyst for the upward move. And then the other extreme is like way over here. This is the next extreme. And this one is pretty different. So this is saying that the lowest we come is 550, that we won't come back below 550, that whatever we do now, we don't come back below that. We come back down later and it just dips to 550. Maybe it's after this jump over the blue line kind of thing. Again, I'm not sure exactly how that would look, but we can estimate that maybe it comes up here and then earnings happens, redistributes back down. It just becomes this massive widening structure. And then, May or June or something like that, you've built back up. And this is the lowest. It comes back and then you break out again or something like that, right? That could be a possibility, and that goes into election year. So the high and the low possibility are both I think they're both on the table right now. What I was trying to do is see if there was any kind of a sense to using the lines we already have. Is in these ones, it does use that initial like bounce in, the reaction. And I think that might be wise to try to use those initial lines. They're pretty darn close on this guy. This one, they're harder to judge because I'm not zoomed in, but you can see if you look really closely, you can see they're reacting right around them here and here. That rotation especially looks really strong. This right here. And then you can see it like the zigzag that happens all happens along that marker going up. But it's not perfect. And then you look at this one, it's much more like neat and pinpointed. It looks really tight, to me anyways. There seems to be a really strong connection here with the spring and then where we go later to drive the price low. So that this was kind of like a testing of that trend that, yeah, we want to dip down lower, but let's go up and distribute, and that way we can drive the price back down through that. And then this is almost like a back test, like a double back test. Tests a lot of things, but it's really almost like a test on this guy, right? Like a big old giant hook coming back up before again going low. You know, all of this stuff makes sense from a supply and demand perspective. If you're thinking about this being as a test of liquidity, like, are we going to go down low? Are there enough sellers to go low? Yeah, there's too many sellers. So we drive the price up high so that we can just sell our shares. And we already know, we talked about this a lot. BlackRock sold off everything pretty much in this big pump up. So they were out. They got out. You can look at their filings. They sold a ton of shares here. And then Vanguard actually bought a bunch of shares on the other side. I think they lent them all out and collected on them. And then I think they got out again. Vanguard probably sold all their shares over here. Basically all the same company anyways. But you get what I'm saying? So here, I think the idea is, no, they care. They want retail to be in when they want retail to be in. They needed people to be buying here on the way up. They have to have that so they can sell their shares without the price tanking. If BlackRock dumped all their shares onto the market immediately, it would have just, you know, they wouldn't have been able to sell at a high price. So they have to generate FOMO in order to get buyers buying. They care if you're interested. But what they do is they generate FOMO, fear of missing out. They generate this excitement, right? Hot-handedness, where people think that it's just going to keep going up, and that's when they're selling. It's the same thing they did here locally when this got to the top, and we were talking about how it's probably going to come back down to 9, because they're going to be selling right now into retail. You can see those kinds of things in price movement and in volume action as you get towards the top. And you can tell when they're done selling and retail is still buying and it's just like fumes. You're getting to the top. Retail can't push it by themselves, and then they're going to do it again. So they come back down and they do it one more time and they distribute. That's what a distribution is. It's using retail to get rid of your shares. They literally call it taking, they literally say it's selling from strong hands into weak hands, basically. Like, hey, I'll give you my shares. Go ahead. Here, I'll sell these for you for $10. Here you go. And you're like, yeah, I'll buy that for $10. And then 2 weeks later, the price is dropping and you're selling off for a loss. That's the nature of institutional play. And you don't have to believe that, but that's the nature of it. Like, that's what everything's based on. So they care if you're in it because if they want to pump this up to sell their shares that they did accumulate down here, and I think they did accumulate down here. There are lots of shares that are accumulating. They're doing more than one thing, right? Because you got to imagine, like, I'm exiting short positions on this pump, right? This is going to give me a chance to sell what I've bought. So I'm exiting short positions and buying back shares. I can buy back some shares. It's going to go up again. I just get to do it all over again. The biggest difference between retail and institutions is retail doesn't know what's going on. And so most retail thinks that the market price is erratic and doesn't make any sense and that it's just this rigged game, and it is, but they kind of just throw their hands up, and when they see up, they think, oh, it's just going to keep going. Well, that happens like once in a while, but that's when an institution's largely just driving it up. And they're only going to do that if they see lots of retail buying it. They can keep driving it up. Once retail stops buying as much, they're done. They're just going to sell all their shares. They have to. the other thing is, like, a lot of folks don't remember, this was a long time. This is like a 10-month accumulation down here. We haven't had anything quite like that. This was the most similar that we had, and it was very confusing, and it ended up being distribution, and it stinks. But guess what? That distribution, that sideways action resulted in a huge move. It just went the opposite direction that most retail wanted it to go because they were accumulating shorts, right? So we need to have like a bottom that's big and wide. And when we first came down, what I said is that because there wasn't a V-shaped recovery, and I stand by this, you can have something like this where like maybe an influx of billions of dollars all of a sudden into a stock can cause the stock to really have this crazy reversal. But normally it's more slow and like methodical. It's chesting all these different regions while you're doing an accumulation. It usually takes a long time. So when we didn't have that V-shaped recovery, and you could see how far away that creek is, it's like way over here now. I mean, you have to run, at this point, you have to run up 700% just to get there. How are you going to run up 700% if you don't have a cause for it? There's no effect if you don't have a cause built up. That's Wyckoff theory as well, but it makes sense. Like, you have to have a drive. There has to be a reason. And if they haven't had enough time to accumulate shares, they're not going to drive it all the way up there and spend all this money because it costs them money to start it off and do it, right? So the longer this stays low like this, the more likely you are to have some kind of a big reaction up. But we've seen that that doesn't always necessarily happen. Like, and especially with the model that we've been talking about today, a lot of times it's all designed to kind of pump and dump, essentially, like build up, get up high so you can dump your shares. We want that to change, so we want to see something that's more like an accumulation. This isn't exactly like that. So the way that I'm even drawing it right now kind of suggests that there won't be an accumulation. And this is why, like, somebody that's doing like Wyckoff or some other theory, they're going to look at stuff like this and say, well, that's crazy, because you'd have to know exactly what the operator wanted to do next to assume that this happened. Okay, well, I don't think it's an assumption if it's happened like 3 times. I think it's just a pattern. Maybe it doesn't happen again. Maybe this is low enough. Maybe on the big picture, we see that this changes the way that things work. Totally possible, right? But it doesn't change the fact that these have been very key levels. And so you have, at this point, over 2 years, a composite group of shorts, right, who are expecting the same results every time. So those operators, and there's a lot of them, those are hedge funds that are betting against AMC. They're playing the pattern as they see it. So they've seen this multiple times. They're going to be expecting the same thing. So no matter what happens, you have to either reverse expectations completely, which is like what happened in January, right? Where you just get this kind of rip that just like defies the expectation, or you're going to have those people dumping they're going to be selling, you know? Like, if this thing rockets up past 13, they're going to be selling. Like, I guarantee you, as soon as it gets above even $11, your big money institutions are selling into retail, and we'll see how high it goes. But that's my thought about it, is like, I don't think it's a guesswork kind of thing. I think it's pretty much a sure bet because that's the way they've been doing it. But could it be that when it does do that it comes back down, and instead of breaking lows, it stays high? Yeah, and this is what happened in January that led to the June run up, because it didn't come back below. And this is what ultimately a lot of people want to see happen, because they want it to just kind of keep going up. Is this possible? Yes, it is. Look, it even looks like a little inverted head and shoulder kind of thing. Sure, it's possible. But the thing is it has to be a change of character. Like, because right now we haven't experienced that. There's no evidence that there is a massive change of character. Volume is the biggest thing that's changed. But we also know that there's all kinds of crazy stuff that happened that led into this, like the creation and then absorption of Ape. We know there's been share offerings. We know that there's been a massive amount of effort to like short this down. There's been a reverse split. There's a ton of stuff that's happened. So they didn't dump their shares. They have other ways. So like you're opening when you open a short position, you're right. It's probably synthetic, right? But the thing is like there's always shares available, right? It's almost never a time on AMC where there's no shares available. It's pretty rare. And even when it does say there's no shares available, it's usually like an estimation, and we find out later, no, somebody bought more shares, right? Weirdly, like I said before, Vanguard bought in at the top, and that tells me that they probably bought shares and like lent them out. So do I think that they can do weird things to make shares available? Yeah. They saw this as a cycle. They eventually got their shares sold off, I'm sure, back in August. It's the same exact price that they bought in at, y'all. It's not a coincidence. It's just not. Go look at the 13F filings. You'll see that Blackguard sold off right around here, right near the March tops. Vanguard bought in near the March tops, like after it dropped back down. When did they get out of that? Probably in August. So were they holding shares at a loss that whole time? Maybe, but maybe the whole point was so that they could make those shares available to short. And eventually they get out, maybe with a little profit, but I don't know. Those are questions I can't answer. I'm not an institutional trader. I don't know exactly what they're allowed to do or not allowed to do. Maybe that's too low. Maybe they already sold them. You know, I don't know. But every time you open a short position, yeah, it drives the price down. Also options, because as your options run into the money, people can execute those trades. So they have to be able to, what? Sell. So an execution on a put is going to add more selling pressure only if it's executed, right? Not just buying and selling. That doesn't necessarily do anything. That can drive the bid and the ask on the options price, but ultimately may not affect the outcome of the stock price, arguably. But I mean, once you execute an option and you say, yeah, market maker, I want to sell my shares for $44, but I'm already down here. They're making a ton of money, you know, and they have to sell. So they have to have shares to sell. So yeah, do I think that there's synthetic shares? Yeah, of course. I think there's synthetic buying as well. And that's the nature of the market, right? I think the synthetic selling is more frustrating because it comes with more share than should be available, right? But I don't know, man. I think there's a ton of people holding shares still. I think there's plenty of shares to short sell. I don't feel like it's that big of an issue. And if it was that big of an issue, then what's going on really? There's still people out there that are on the ball about that. They think that this is going to explode one day because of a huge short squeeze. I don't know. Maybe it will. Maybe it will. But I don't know how to reconcile the last 2 years then. And the idea that someone didn't make a ton of money bringing this all the way back down, just, I don't know. That's just silly to me. I think someone made a lot of money bringing it back down. A few people probably made a ton of money bringing it back down. So anyways, we've got this window here, and I think we're just trying to figure out, or I should say I'm trying to figure out where, what makes the most sense, I suppose, for this window. I'm not sure yet, you know. And if we use like the levels that are already available, like let's say we did like a midpoint one, that might also help us because maybe there's one that's kind of splitting the difference. It could be that it's a little more accurate, you know, in some ways. Like I like the midpoint because you can see here. Now see here. See here. You can see that actually kind of follows with the price movement pretty well. You can see that. And I think that one might be my favorite one. It's just cutting through the middle. But I find that to be a bit difficult to understand from a technical side. Like the only hit we have on that line up above was right here on, looks like September 1st. Maybe that was it. I guess we can go look closer. I just don't want to like make it super cluttered. Yeah, I mean it's pretty, seems pretty important. But only here. I mean it's really tight. So at 12.16, that could be your midpoint. That might add up too, because I think there was another target that we were talking about up to 12. That target comes from that rotation. So 12.16 as a possible target or possible midpoint. We can take that to the rotational chart. See what that does over here. This one's starting to look really ugly again. So I was like highlighting everything. Not all of these need to be like highlighted. We could do horizontal at 12.16. See what it looks like. I'm not sure. Yeah, I mean, it does seem to intersect the upper trend here. Around that January 17th date. That was the one that we said we thought it might hit, but it's hitting here on the 16th, not there. So that's different. These are difficult estimations. I could do a 50% on this guy and see where that goes. That looks like it goes right through here. Let me try that again. So the 50% is a sine wave calculation. Arguably we could lower it because they went lower, but basically it's measuring from the top to the bottom. And then assuming that this is like a fib fan kind of thing, you would say that this is like the 50%. And typically what we find is that that tends to be pretty accurate. So that would be like the 50% of the sine wave. So it should point to the top of the next sine wave if we did it right. And it looks like it's a little bit high. But then again, I didn't draw my wave to the top, did I? I drew it right up to that purple marker, not the other one. So, and this one comes higher. So, I mean, it's like more of a spread around it. I think that's pretty accurate. It looks like it might be, I might have it slightly. What's weird is that it doesn't seem to respect any actual trends. So when I do it like that, it doesn't really respect much of anything here. It just looks like it hovers around it. But maybe. That one looks pretty darn close between what we were saying before and what we think might happen. And the 50% doesn't mean it stops there. It could just be that that's where we get this kind of whipsaw effect. So it could be like that it whips around that 50% marker. Really, the only quote-unquote guarantee that we were thinking we had here was that by around January 17th, we should be up near 1078, which is very soon. It's only 2 weeks. We have to start getting a move on, which I think is another reason why this is probably something that a lot of folks are going to look at and say, nah, I don't think it's going to happen. But we're way off, you know, like we came really low, like we're slingshotting away from it. I don't think it's a far-fetched target at all. Take a deep breath. I'm going to stop in a few minutes and I'll help you out, okay? Those are like those little ones that we did. Those are hard, aren't they? Yeah. I had trouble with it too. Yeah.
No, it's not that. It's that like it's impossible to click the thing. So it says put this thing in like so this middle dot is in the middle of this, but that's impossible because it's not a free thing.
I don't know. Maybe you got to count the dots on there. I don't know.
Well, it's in a 3 thing. You can just tell.
Yeah.
You can't possibly do that. You just can't.
Well, like I said, I'll help you in a minute. So this is the target region that I've got locally for the rotation. And it does make a lot of sense. Does this add up on the other chart? I don't know. I think this is where things are we're gonna kind of run into some butting heads on the two different ideas, because, and I want them to be reconciled, but I haven't quite gotten there yet. So I've been working on this, and as soon as I kind of feel like I've got the main kind of point down, I guess is what I'm trying to say, I would feel a lot more comfortable at that point than sharing that with other people. So on this particular one, it seems to suggest we wouldn't necessarily come above this particular point. But maybe we will, because if this ends up jumping over this creek, this could end up being like that kind of move that goes up, where this is like a 50% marker. We've seen that before. This is not unusual. This is actually exactly what happened like in March. It looked like this, where this ends up being like a 50% and it goes really high. I suppose we're just trying to find other evidence aside from this measurement that it would do something like that. Because I don't know if there's that strong of evidence right now. So whether this goes low again or not, the idea is that you'd probably sometime soon head up, and then you come up to like this 1080 to 12 area and then drop. And this is where we have the debate, I guess. That actually looks pretty close to what we just said. This one's a little bit lower, I think, because this wraps around 1080. And this one wraps around, it's a little higher, actually. It's pretty similar, though. So, yeah, maybe this is what we're going to see. I'm just so doubtful because the rotation doesn't come up this high. That's what's throwing me off right now. It does not come up that high at all. The rotation has it stopping and going back down right here. But man, the iteration suggests that you could see a pretty big pop. And I know earnings is right around there too. So it's tough. Tough. So we're talking about it jumping this guy right there. That's what I'm looking at over here. So this is where I've been kind of like stuck, I guess, over the last couple of days. It just seems like approaching that 1020 target, which is basically right here, you would have a lot of trouble because that's where your gap is. I think if it comes low, we might expect it to stay low. Like it doesn't break over this guy, and that would probably obvious at that point. And if it does, then we might see it move up again. It would have to be like this. Well, I do have the slingshot thing. The slingshot thing is that basically wherever your bottom is, this leads you to 50% at the top. So this would suggest that your top is going to be 1158. It's pretty darn close. The slingshot's a weird way of measuring because it relies on these little cliffs. But it basically, I don't know, it's been a while since I've used it, so I'm kind of confusing. But basically what it states is that the dip here is designed to get you to the 50% mark. So it's specifically catered, it goes as low as it needs to go, that it's 50% away from this marker. Does that make sense? So like it pulls down away from the middle so that when it reacts to the upside, that this ends up being like a perfect kind of 50-50, like goes halfway and then it goes another halfway. And it gets you back up over the top. Now, right now, it's designed, it looks like it's designed to get you back up just to the top. Like it's not going any lower or any higher. So that's kind of a bummer. Yeah, it's basically right at the previous top. So this is bizarre already because it's like this is already a 50% down. That's not always the case. So sometimes this would set up higher, and then it would mean that this could be, like when it explodes to the upside, could end up coming up higher. But the thing is that that's the first one, and then the second one is here. So that would be like where you're going to go if it breaks up right now. Like it doesn't make another low. If it makes another low, it changes the target, okay? It's that simple. But if it didn't make another low, then this would be your 50% up here. So I would say that your expansion should then come up to roughly $20, which is crazy. Yeah. So locally, if this were to break up right now and get up here to 1146, find support at 9 something, you could see this thing break out again, and if it breaks out again, then my price target is 1968. Now that's a lot higher than 14, but I think that that makes sense because it might be like a retest of, because I know this says it looks like it goes back up. I think it might be a retest of that 14, or that channel, rather, that was 2-year channel. So it like pushes back into the channel and then retreats from the channel. And in doing so, it comes back above the middle line on the iteration rotation thing, or the iteration thing, not rotation, but the iteration thing. So this would be a complete abandonment of the rotation to some degree. Like I think the timing of the down might be similar. One could argue that that doesn't really matter though, because maybe you can interpret this rotation as a very simple shape. I guess you can. Because the rotation itself could just be thought of as a triangle. Because this is a narrowing. I mean, so you guys are getting like annoyed, but this is like a narrowing right here. It doesn't quite read that way, maybe to most, because the last push up here doesn't really make any sense of it. But I think that it is to some degree just a narrowing, you know. And I remember on the combination chart, you all remember that? We looked at that for a while. It was like this. It was like this weird flat narrowing thing. Yeah. So it could be that that's maybe like a better way to look at it. And that this widening that occurs is really all that matters here to here. Yeah, that's possible. So I'm thinking about the rotation, and I'm thinking about the maybe like what we're experiencing right now is that widening. Does that make sense? So after this turnaround, you get this kind of reactive move, and then we start experiencing this like widening range here. And then I think you maybe could debate how high it goes. There's no guarantees though, because I mean, at that point you're kind of at the mercy of supply and demand. This would make me feel more like the widening would only take us up to like 1245.
Hold on.
That red area. So same problem, I guess. No different, because it would just be like a fake out. And that's where the rotation is, isn't it? Right there. Yeah. So there's two targets. Then one would just be that this pops up to, I think this target's still good, by the way. I think it would probably come up to 1125, retreat, come back down, and then it probably has a second up thrust no matter what. But in one situation, it doesn't abandon the rotation very much. Instead, it's just like a double top. So you get a push up and then a second push up, kind of like what we got over here. And this one maybe comes up higher to like 1235 or something, but it doesn't ultimately go beyond that. And then it retreats from there. The other one would be the full-on widening here. So one is like a very like mild, I guess you could say mild widening. The other is much more aggressive. Yeah, it's tricky. Without that other point, it's really hard to do it. And this one really starts on that top after that first. So the suggestion would be here, like that your widening would be, this is a weird one to draw, like this, I guess, like super low. I don't know. It's really strange. Well, maybe like that. So if you hit the top and you come back down, that looks a lot more like the other thing we drew, like really similar to this one, where then it comes back down here, like low. It's pretty much the same thing. Yeah. So I think if it hit this one, instead of going high, you're just going to distribute maybe along, I mean, I don't know exactly how it happened, but it'd probably be something like that. And then you come down, there's the $3 mark in February. It's the same thing. So that adds up. It ends up being the same. So that price doesn't really change anything, that interpretation of it. Which I guess makes sense, because if the rotation's true, then it would be on the rotation, like it would work, so. Yeah. It's gonna be hard to sort of keep these charts clean right now, because there's a lot of possibility. And without having like the boxes and stuff drawn, it kind of just looks like I'm making stuff up. Like if you get rid of these boxes, you're just like, oh, so you think this is some, you know, it doesn't really make sense of like the math behind it. Once you see the boxes, you're like, oh, okay, I get it. Because then you understand like where I'm measuring from. So it's just kind of one of those things. You might wonder why I didn't go all the way up here, but I think it's possible that this is actually like even lower, like down here, like 17 something, because the 50% mark isn't exactly at this top. And the way I had it drawn before was I drew it to this bottom. So that's the reason why I was using that one. And I think it has more to do with the preliminary support than it does these tops. These tops both kind of exceed that, so they go a little higher. Yeah, so that's why I did that. Right, so then this will be the 1235 hit where you reject, and instead of going up, you go down. And then this whole thing is a whole nother bit of business, because this is now a 50% retrace. And this is where we got really messed up the last time. And this is right around earnings. So earnings is estimated earnings, right? It's not like a sure thing yet. It is estimated to be around February 29th. So this is like you're into low, and this is, instead of being in low, you do come down. So notice that like the waves are the same. The ups and the downs are basically identical. You still come down in earnings, but you're higher up. And this is where things get kind of dicey, because it might be tempting to think that just because we came up, it's going to continue up. But I don't know if that's necessarily the case. The only time that happens is when you're setting up for a bigger run usually. And that could be the case here if we get over. Yeah, it's possible. And then you could end up with a kind of a breakout later. Something like that. Makes sense. It's just an accumulation right there, where it jumps a creek and then pushes up. Or, frankly, I mean, this could just be like, again, another one of those silly cat ear things we used to talk about, like this. And then it just drops. And this is where it comes down finally to the low. And we had estimated there's another possible low here around 550. Why is this one going to like 430? Did it extended hours? Yeah, so that could be also a possibility here. Yeah, and this would be ugly because it would probably happen in a way that to us would seem like just crime. Because it would look like it's just melting down, but really it's going far and wide. Oh, and there's your widening right there. So that's like a really robust play out here of that idea. It's tricky. Yeah, I think if this were to occur, then by the time we got to November, we'd probably already be up top. You know, we probably hit it and whatever. I mean, it always could go slower. I guess there's always a chance that this takes forever. But that'll give you like a 50-50, I think. Yeah, 50% markers right here at 1440 or 1423. Oh, it's at this marker right there. Sure. So that's actually like halfway up from the bottom to the top target. What I'm saying is like if it didn't go any lower again, if you go up to like where we think it might hit, again, roughly this top of the trend, that's basically like a estimation at this point. Really, it's over here, but this would be the best guess, be way over here in November. You can see that 50% marker is like right there. So adds up. Seems a little slow. That takes like a year. Maybe this middle period ends up being really long, like a super slow sideways period. Just eating up options and stuff like that, right? Yeah, I guess we'll find out pretty soon. The only other thing that I think is like if it does come low and we get that low hit. This is 440. Why was it 550 before? I don't know. Then by the time we cross this guy again, this would be like the big cross where you end up kind of racing up. And I'll be honest, like I don't know like which seems more likely. They both seem pretty much the same in terms of like the moves. Up, down, up. You know, that's the wave, as it were.
Put the two on here.
I'm going to look at the local time frame. And I said it earlier in the stream, but if you're way late or you just kind of forgot, this is a bit of a curve up, so I'm not really hopeful that this is going to break out. It didn't push over 650, rejected. I would not be surprised to see this come back down and even make another low. So if that's the case, I'll change my stuff, you know, to reflect that. But for right now, this is the low here. So that's kind of what I'm doing. The other thing I wanted to do, let's go to 15, is see if this makes sense of local trajectories, because every every time there's an uptrend, it should point. I know it seems silly, but every time there's an uptrend, it should point to some future target. I know it seems a little crazy. That looks really close, doesn't it? Really close to what we've got drawn out here. Kind of makes it look like you would maybe hit this later, but it definitely seems to suggest like 10 by that 17th date. It's the same thing. Let's see if we can do another one. That one's a lot steeper. No, it's not. No, that's the same date. I guess I need to zoom in. I don't want to fudge it. I want it to be as close as I can to a trajectory, good trajectory line. So I'm going to use this. And I know this went higher until like 7:30 and after hours. So maybe that one. Yeah, that's also right here at 11. So that looks good. All right, so two of those look pretty solid as possibilities. All right, goodbye, Jimmy Robertson. You obviously don't want to be here, so why bother? I'm going to go to a charting channel and talk about how you can't chart. Cool. Good story. Good story. Yeah, this is the same one. There you go. Same trajectory. I mean, you can... I didn't make it up. I'm just kind of drawing them, but it's the same one. So there's a lot of time between now and then, and it is adding up to be very similar. Yeah, I just booted a guy, if you guys are wondering what I was talking about. I don't know why he was even here. Like, you can't chart manipulation, so... Actually, you can. That's the whole reason we can chart. But I guess that'd be hard to think about if you're convinced that you can't chart. The whole reason you can chart is because it's manipulated, because there's a pattern. And I just demonstrated that. Whatever. All right, so this would tell us that it's more like February 14th as opposed to maybe that earlier time that we had, which was like January 17th, 20th. Wow, you did it. All by yourself, dude. Good job. But yeah, February 14th. Up near 1114. So that's another one. So what I'm trying to do is kind of collect everything. So the reason we thought this one was because of the rotation here, that it would be on, possibly on the 17th. But really, it could go beyond that, so you can kind of see why that's confusing. Because it could just be that it passes through that value on the 17th and then continues on. So somewhere around like maybe the 18th. Let's see what Friday is, the 19th. I would think we're going to get 1131. This one's kind of lower. So it's saying it's much later. The thing is like he had to wait weeks to make that comment just so you can get kicked off. Like, I don't get why you would do that. You'd have to subscribe for like 2 weeks. I just don't understand why anyone would do that. Like, I'm going to subscribe to a charting channel, and then after 2 weeks of time, I'm going to come back and just make a dumb comment so I can get kicked off. I don't know. So weird. Well, so they squeezed out longs here. I mean, that's what they did in this move down. Like, they deliberately did it over the course of the Christmas holiday, I think, to just push out all those longs with the options. And it stinks. But now if there is going to be a turn, they're going to be pushing out shorts. So you're going to have people that are shorting it from here thinking it's going to go down really far, and it'll be the same thing, right? So maybe it will drop again. I'm not saying it won't, so don't hear me wrong, because I keep telling you guys like over and over again in the stream, like I'm not positive this is even the bottom. To me, I got a 550 bottom earlier, you know, when I did a lot of this stuff. So I was looking at other possible bottoms. So for me, I'm like, I don't know, maybe it comes down to 550. We may not be there yet. So I'm not convinced that this is a bottom until we get back above 650. If we can get back above 650 and find support, it's probably going to go. The only thing we broke out of kind of locally was this little bit of a wedge shape that you have, and it did break it. It broke that trend. I've got it on my other kind of working chart that I've got going here. You can see it like popped above it, but it's selling all the way back down. So now we're like testing. It's a big candle, right, on the 4 hour. It's just popped up, sold all the way back down. So we're coming back down to test that break. And if it holds, we might see another advancement. I've got another chart. This one's the rotation one. It just so happens to have all those nice little creek rotations right here. And we didn't get over it. Like, it's that simple. So is there confirmation of an upside move right this second? No. No. Is there evidence that it could be happening? Maybe. I mean, I would say, yeah, there's evidence, because on the RSI we broke out, which is kind of interesting. But it doesn't mean that it's going to happen. You know, you have to kind of wait. Once and if this finds support here on this breakout and pushes back above 650, that to me would be a pretty huge sign that we're probably going. But unless that happens, I'm not buying in like a ton. There's nothing, I'm going to not do anything about it. I'm not doing anything because I still think it could come lower. And if it were to come lower, and this is another if question, but if it were to come lower, then I'd want to get in on the lower prices. Like, I don't want to get in when it's up here and then lose value as it drops. Is it a good time to buy shares if you think there's going to be upside in the next year? Sure. It's a great time to buy shares if you think that it's going to be higher than $6 and you're willing to hold for a long position. Yeah, I do. You know. But I also think that with everything else that we've talked about, there's still a lot of possibility in the short term. So I don't feel like there's anything written in stone just yet in terms of right now. I had us coming down potentially to the lowest point by Friday, which is tomorrow. So, excuse me. So if this starts sliding back down and it doesn't come low, then yeah, I think it's possible this could be it. Like, we might have bottomed for now. But again, I still would wait. You know, these are estimations. They're not meant to be perfect necessarily. And some of these estimations have been really close. Like, this one was super close, but it was like in the middle of the two. So it was kind of weird, right? It's like it would have given you the right options trade, but it was just not perfect. This one as well. It was over here instead of being early. So in both cases, it kind of hits the target early and then bounces around it. I think that's just the nature of the wave kind of taking time to bottom or top. So we should be going up. I say that very carefully, but we should be going up right now. We're not, which tells me that it's probably building a kind of slingshot that's going to whip us up. And I think the RSI is testimony to that. There's a divergence on most time frames up above 1 hour, and it seems like we're going down on weakness. I know there's a lot of selling pressure. Don't hear me wrong. Volume's another indicator, but like this push down is happening when RSI is like building momentum. So a lot of things right now still, to me, indicate that we should be heading back up towards this area. And I know I've been talking about the same thing since we got down here, but it hasn't changed. Like there's not been a change to where I'm like, nope, now it's going to drop to 0, or now it's going to drop right now to 3. Not yet. You know, I'm not seeing those low targets. I know other people see them. That's fine. They could be right. I could be wrong. You know, some things don't always work out the way you think they're going to happen. So, but I'm still seeing that divergence is still there. Like it just did it again on like a smaller scale here to here, from November 21st to December 21st. It still did the same thing. So the smaller version of this bounce here also diverted 1 hour and up. So it's a very like, I think it's a very strong chart for a reversal. It just hasn't made the moves yet. We haven't seen the volume come in, and that's what I'm waiting for. It's just I'm waiting for that confirmation and that volume, and then it should be a nice big move, I think, back up to this area. From that point, we're really looking at this macro structure, and it's going to have to keep evolving as we go because I don't think it's perfect. I'm doing my best guess estimations right now to try to determine like what I think it might be. But for now, you know, we're just kind of using what we know. I know it's got really messy, but we're using what we know about the pinpoints here to track where we think that finale is going to be at. Where do we think it's going to get to the end? And guys, I mean, it's weird, but it's fairly consistent. You know, it seems like it's going to be around the November elections. So that's my thoughts right now. And if something changes, you know. One thing that happened here that was kind of weird was in this one, it did come up and hit that level. So for us right now, that's 34. So if we were to suddenly rocket to 34, all bets are off that we even get to that point later. Like there's no question in my mind that we could avoid it. You know what I mean? Like it just could be one of those things. But if we don't hit it now, then I think there's a stronger chance that we come up and we catch it later, like right around here, which again is election time. So honestly, if we hit 34 right now, I probably would just short AMC or get out of it. Because if we hit 34 early on some massive move up, I think that's it. I think it's going to come pretty low and probably won't reach it again for a long time, long term. That's my thought. All right, that's just how I feel about it based on everything we talked about today. If that went up there, I'd be afraid it would just kind of slide all the way back down. Or just have a long form distribution up here and be really boring. Happy New Year, yeah. I will make a video that summarizes the stuff I talked about as best I can, but those of you that attended for the full session today, you're probably going to get the most out of it. Like, you're going to understand it better than everybody else, so congratulations. Because there's no way to explain this very quick. I mean, it's just not. I'll try my best to explain it in like a short form video, 15 to 30 minutes. It's hard for me to do that with something like this. It requires a lot of trust me bro kind of stuff, and I don't really like that, but I'll do my best to summarize it, and I'm going to work on this. This might change. This needs to be hammered down here. Yeah, 34. No, this is what I'm trying to say is like, I don't know exactly when it gets there, but I think it's before elections or at elections next year, because the way that this is set up, very methodical, and it has never 1, 2, 3 times never avoided that back test. We have not yet tested 34, that level. And it's a very specific hit that's made every time before the big, version of the iteration happens, and there's a big rotation that happens. So all timing points to elections, that would be the finishing of the move at least by then. There could be a number of things that happen before then. And that's what I'm trying to determine what makes the most sense based on other charts that I have. And I'm not quite there yet. I feel like I'm really close. It's frustrating because as much as I feel like I've been wrong about stuff in the past, and or maybe I felt like I was right about something in the past and then I was wrong about it, I look back and I'm like, well, I know why I was wrong, right? And then everything's been like adding up over time. And at this point, I feel pretty darn good about this particular setup. Like the way it's being measured makes a lot of sense to me with everything else that's going on. The sine wave itself makes sense to me. There's stuff here that, I don't know, in the grand scheme of things, everything's just kind of clicking into place all of a sudden. But it's sort of like a lock where you're kind of like moving through the lock and the pins are falling into place, but you haven't quite gotten to the end yet. I'm kind of feeling like that right now. Like this is sort of like one pin and then there's another pin and I'm like clicking through it. I can kind of feel my way through it. I'm starting to feel like it's starting to click really well, but it's not quite there yet. And I know that other people are still calling for more downside. I don't think that downside is necessarily over. This keeps moving, but I had like 450 to 550. I got other targets that are much lower, like 350. I know I'm using a lot of 50s, but that's just what they are right now. So I had like a lot of lower targets that could be met, now or in the future. So I don't necessarily think that like these are possibilities. They're not definite things. I don't necessarily think that they're all going to hit, but I know that they're being targeted. Same with upside. You don't always know that they're going to get hit. Like we know that I personally, and I'm not backing down from this, even though I know it didn't happen. I know for a fact that 860 was being targeted, and I know why, and I know exactly that it was not meant to break out there. It was just going to go check that level, but they didn't want to jump this lower creek, so we just didn't check it. Whether or not someone believes me, that's another question. But when I go back and I look, there's so much stuff that corroborates it. You're just like, yeah, they just skipped it. They didn't go back and do it. And that leads to the question of the other guy was saying, well, they can just change it, so you can chart all you want, but you're never going to get it perfect. No, I won't. But the thing is like when there's something as consistent as a back test that occurs every time, and it just so happens to be at a level that makes perfect sense for us to go back and check because we just jumped over it, as soon as we get back above like this $12 level, we're back into this previous range, and it makes sense that we go up and very quickly check where we've distributed from. We never checked it. And this is not a check, in my opinion. This is just like an LSPY kind of thing. It's a back up for supply, and then it goes down. But it wasn't like a big macro pump and dump. So no matter what, even if it distributed afterwards, I still think we're going to get that test. And mathematically, it's set up really well. Now it's just a matter of finding it and making sure that it's the most accurate that it can be. I don't personally I don't really have a lot of trade in it right now other than like the shares and some of the longer leaps that I've got. But me personally, like as I develop this more and I look at it more, yeah, like I'm going to be looking at long-term in the money options or, leaps. No, I don't think you can get leaps for 30 something bucks a year out. I don't know if you can. But you probably could do in the money, or close to it or whatever. So there's definitely things that could be done that are mitigate any kind of craziness that happens in the middle, and there's going to be opportunities to, on any of these pump ups, even if it only went to like 12 bucks, that's, if you got a leap right now, it went to 12 bucks, you're going to make a bunch of money. Then there's an opportunity for you to get out and wait and see what happens, or ride up some of them and blah, 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 blah. I mean, there's just so many things that you could do. We just did the same thing on Charge Point. It was a crazy good play. I called the bottom out. Looks really similar, doesn't it, in some ways? I called the bottom out down here, got some long-term options, real long-term stuff, like 6-7 months out. Popped up, made 250% on options, you know, pretty easily. And I'm pretty much out of that play now and just kind of waiting. That's not hard to do if you're thinking long-term and you have like a plan. It took a while for those to kind of come to life, but then once they did, and you're good. I think of options the same way on AMC is probably a better way to play them than doing really short-term stuff where you get burned. Those are like hot handing. You need to be like, personally think that the best way to play those is in and out within like an hour. Just play a trend and that's it. Because otherwise, usually you end up getting kind of stuffed out pretty bad. So, makes sense? Yeah, probably. I don't think we're going to get to the 40s on that push-up, though. I know it sounds weird. Unless it breaks out, I don't think we're going to get to the 40s. Because even if we made like a straight shot there now, we'd have to basically go straight up to get to that without breaking the major downward trend, if that makes sense. I'm not saying it's impossible. I'm just saying that, because nothing's impossible, I'm just saying that it seems very unlikely to me that that happens. I think it's way more likely that it comes back to retest that floor here, but that avoids that gap. So, because I think the gap might be what's being used to help drive retail. Like retail would see that gap and think it's going to keep going, and so they'd be buying in when it hits like gets above 20. Everyone's going to be buying, getting ready to sell in the 40s, and we may never get there. You know, it might turn before then. I think the goal isn't the gap. It's the check here at 34.24. I'm going to stand by that. Like I said, I could be wrong, but at least for now, I wouldn't personally. That's just me. I'm not trading beyond that point in the future. That's a long ways off, but that's the way I think about it. So we'll see. We'll see what happens over the next month. But it looks to me like whether we're at a bottom now or we're still going to go down a little bit lower, maybe to like 550 or something, doesn't really make a huge difference. But I do think we're priming ourselves for a decent run up, at least to the top here at around $11 to $12. And then if we can get the second part of that move on an S curve, we're probably going to go to near 20. If we can't get the second one, I don't see why we don't redistribute back down and come low. That's where we're talking about low targets, like fours. I mean, we talk about 550, 450, and 350. They all came up today. So that's where I think we would have to reassess. And that could drastically change the rest of this. But the good news is that once we kind of nail down that marker, we should be able to then pivot this box and get the next target, because it's worked every time, you know, for identifying where those targets are. And that's great. You can make a lot of money. So like this year, well, this year's only lasts for like 2 more days. November 2024 came up multiple times. I did 2 or 3 different measurements and it kept coming up. And that makes sense because that's the election. So I think that if you're talking about cycles, the cycle would make sense to end after like a 4-year election, that you could enter a different cycle. The first cycle here was only 1 year. It was like June to June or something like that. And the second one looks like it's going to end right at the election day or right around there. I mean, you guys say what you want, but I didn't try to hit that date, you know, like I was just measuring what I thought was where the bottom was into the middle. And then you look at where that ends up hitting, and it ends up running into our wall right there at November of 2024. So early November. So that's election. So I mean, like, that's probably not a coincidence. And I guarantee you this is one of those things that I probably won't live it down if it doesn't happen, but it seems like pretty darn perfect. So we'll see. What's the simple version? Up. The simple version is this line here just going up towards the other side. Because like, and I made a point of this earlier, but like what we're talking about isn't, it seems really abstract perhaps, but it's not that weird. Like in the end, it's a very simple, it's a really simple chart. It's just a widening, and it has reversals, so it has these rotations, right, that widen out. And we're in a phase right now where we're kind of heading down. We should then make it one that goes back up. Does that make sense? So you can kind of ignore certain things and just look at these bottoms. We just don't know exactly where, if we're going to get this big spike up through that midline or not. Because each time there's been that kind of move to distribute along the middle, we haven't come back and checked it yet. So the next battleground is like here. That's what I've been trying to say. Like, it's hard to say like with surety that this is even like happening still, but I mean, one also could make the argument that this was your up thrust, you know, to the 50, and that it's not going to go any further because clearly, you know, this is where the lows are here and here, but it doesn't work really very well going backwards. It doesn't make sense of the middles, is what I'm trying to say. It only makes sense of the bottoms, so it's kind of confusing. I did it a lot of different ways, and yeah, what I ended up with was this concept of like, it doesn't really matter if this is another alternative because in the end, it gets over the top one. It doesn't go over the bottom one. So at some point it'll come up here and it meets that criteria. It's going to hit that top. That's the math that we're doing. Right? So I'm making it look like it goes up right now, but that might not be the case. It could be that this is going to pop, then drop low, and then come up. And that's what I'm trying to say. The only thing we know for sure, and I've repeated myself a lot, but the only thing we know for sure is that it always comes back and checks this level at some point. Right here. That's where the retest happens. What we don't know is whether it hits that first, or so it hits it in May or it hits it in August. Which one is you move? Right. Right. So take that as you will. I think it's fairly simple, but it's the math behind the measuring is where things get kind of wonky and weird, right? And so the determination of like where does it actually hit this marker can be kind of confusing. All the stuff that can happen in between, basically. So if you guys want to take a stab at it, feel free to share it with me in the Discord group. If you find something that I missed. I'm just one guy, so I got other things going on. I'm not always doing this. But yeah, it definitely seems to me that this is probably right. And that we're about to do this middle check. I don't feel like we've done it yet. Yeah, I just can't see that as happening already. I wish there was a way to do like expanding. Yeah, I don't know. I wish there was a way to do expanding sine waves. It just bothers me. This is all that you can do with sine waves. This is not very helpful. I don't know. Like, it seems like they're kind of should be able to do them differently, but whatever. Can't for some reason. Yeah, I mean, that's not really helpful. It kind of just suggests that you should be on an up if this were the case. If it was really like this micro one. Like, why aren't we up? I don't know. You should be going up. I mean, it's confirmation bias, I suppose, but I don't like it. Call the market makers. Yeah, I'm sure they wouldn't tell you. I guess I could make my own. Like, I could try to make my own sine wave. That might be something I could do. Just to do it. Just try it out. It might not be that hard. Pretty decent with the visual stuff. And it's so you just pull it back towards whichever side, because it's not an oval, it's like an ellipses, so. This might be a good way to demo it in the video instead of doing it like I did. Seems about right. It's just one continuous long fractal expansion. Actually, it looks pretty good. I guess if you have the midpoint, it kind of adds up. Makes it easier. I don't know. It's kind of tough. Still hard to draw. The next one's huge. So what you're saying is it's going really low. Well, maybe. I don't know. Maybe this is how it defines all of the waves. Seems like I'm onto something here, but I don't know. It's tricky. It's just hard to draw it. Really difficult. difficult, actually. You'd be relying a lot on like estimations too, where you think that certain things happen. Yeah, it's tricky. All right, well, I'm gonna head out. I hope you guys have a good one, and I will catch up with you whenever the video is posted. See you later.